Financial Protection Bureau to our committee. I would like to take a moment to highlight just how important the CFPB has been in the past year. Under Director Chopra's leadership, the CFPB has been combating redlining, housing discrimination, illegal evictions, and foreclosures, and has worked tirelessly to root out appraisal bias. I commend the CFPB for its announced plans to create an online registry of companies which have violated consumer financial protection laws, which will certainly support CFPB's current efforts to hold repeat offenders accountable and ensure consumers get the relief they are owed. CFPB has also put pressure on the credit bureaus to make overdue policy changes to relieve the burden of medical debt on consumer credit reports, highlighted financial institutions' excessive overdraft fees, help small businesses get the access to capital they need to thrive, and closely monitored the impact that fintech products and crypto assets have had on consumers. And so, committee Democrats applaud the CFPB for once again putting consumer first, all of our consumers first with these critical wins, and we remain committed to fighting against any and all efforts to thwart this progress. We're also closely monitoring the deeply flawed ruling from the Fifth Circuit that focused on the CFPB's funding that would disrupt the entire federal government, harm the economy, and leave consumers with fewer protections than the predatory pre-financial crisis days. Democrats support the Justice Department's and CFPB's appeal to the Supreme Court to overturn this absurd ruling, and we stand ready to support the CFPB as much as we possibly can. And so at one point yesterday, the ranking member mentioned that we oftentimes work together. We've been able to work together on any number of issues, and that we will continue to try and do that. There's a lot that I could say about my displeasure with the way my Republican colleagues have dealt with the Consumer Financial Protection Bureau. But I'm going to eliminate the criticisms that I have in an effort today not only to recognize that this is our last hearing and that I'm looking forward to working with the ranking member, and also I want to give the opposite side of the aisle the opportunity to at least identify what that is they lack and appreciate about the Consumer Financial Protection Bureau. And so, in an effort to start out to end on a good foot, I will yield back the balance of my time.
Well, Madam Chair, a point of personal privilege, if I may. On that note, you should have picked as a different, as your last hearing, a different witness from a different bureau, with all due respect. But I do want to say, as a point of personal privilege, I want to congratulate you on your 4 years as chair. I know that was not your intention for next Congress, to not be chair, but I'm excited to have the opportunity to actually take your chair. But I will say it has been an honor to work with you. The historic nature of your chairmanship, I noted at the beginning, in the first hearing, first Californian to chair this committee, first woman to chair the committee, first African-American to chair the committee, first, I'm sorry, Blaine, sorry, Ann, first Missouri-born to chair this committee. A lot of firsts in that. And I know you worked intensely hard to get the chairmanship. and long career in California politics. And I want to congratulate you. And the great news is, because of the great working relationship you had with Hinserling, if you have a portrait during my chairmanship, I'm going to put you two right next to each other. And then, but we'll have to position Barney to be able to just stare at the Democrats, not the Republicans. But I do want to congratulate you on that. And we have, from time to time, worked together. Last Congress, we did big things together that took down the temperature on controversial subjects in this committee. And while I offered to help on this, it was your leadership that enabled that to happen. Same thing with the CARES Act, the good work we did with the CARES Act. Same thing we've done on our approach to confronting Russia and Ukraine. And I want to commend you for that outreach, because without that outreach, we could not gotten a bipartisan product. I know there are other partisan products you may list and all that under your chairmanship. I won't, but I'm grateful for the outreach and the times that we did work together, and I hope that we can do that next Congress as well.
Well, I'd like to take a point of personal privilege at this point, and also thank you for the times that we've been able to work together. But I want to spend a little bit of time on some recent work that we've been doing on stablecoins.
Oh, yeah.
Our staffs have been working very, very hard. We have all taken cryptocurrency very serious. And I want to commend all of the members on both sides of the aisle for the way that we all conducted ourselves yesterday. I think every member had something important and very, very, thoughtful to say about what is taking place, what we're attempting to do, our surprise at not having Sam Bankman-Fried here to testify. And so I am not only wishing you the best in your chairmanship, but I'm looking forward to continuing to work not only on some of the issues that I've alluded to, but certainly on cryptocurrency. Thank you very much, and I yield back the balance of my time.
Thank you, Madam Chair. And along the lines, I agree. I hope that we can continue the bipartisan work of this committee, because this is the center of where the legislating is going to happen on digital assets for the coming years. So thank you.
Thank you very much, and I now recognize the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 4 minutes to give an opening statement.
Well, thank you, Madam Chair. And Director Chopra, you almost made it. 2 weeks before the close of Congress, you're at your second statutorily required appearance this year. Welcome back. You can look forward to a few more of these invitations next year. And we think we'll have you back before the committee a number of times, and look forward to you being very willing to change your schedule to adhere to that. So, look, we have a lot to cover today, and I'll start by stating the obvious. The CFPB's lack of transparency is of grave concern. Over the last year, committee Republicans sent more than 10 letters with specific questions we wanted answered, to which you replied with single-page responses. It looked glib and not as thoughtful as a major regulatory agency should take congressional oversight. My encouragement would be for you to actually take those letters more seriously with the new majority next Congress. Because without proper oversight, this system of government doesn't work well. And it's not good for financial institutions, it's not good for market participants, it's not good for consumers who we're trying to protect either. In fact, what we've seen from Director Chopra's leadership, he's only put forward one real rule through the notice and comment process. And that action was directed by Congress under my bill, the Debt Bondage Repair Act. Meanwhile, you've issued 6 compliance bulletins, 5 advisory opinions, 5 interpretive rules, and just this year, 7 circulars. While not legally binding, such clarifications and guidance without time to process the changes foster an environment of uncertainty for the industry. That doesn't make it better for the consumers. Financial institutions and other market participants change their behavior, increasing compliance costs, ultimately limiting consumers' access to affordable products and services and leading to more confusion, not more clarity. You're implementing progressive policies at the expense of both consumers seeking financial products and market participants trying to comply with the law. And you're doing so without fully and transparently considering the consequences of your actions. You've also moved the Office of Innovation to the back burner, which has had almost no activity during your tenure. You did, however, rescind a no-action letter as well as a sandbox approval order. And you gave virtually no notice to those market participants and threw their operations into jeopardy without signaling any willingness to work with them to address the Bureau's concerns. And again, this is no certainty and no transparency along the way. This is all against the backdrop of the Fifth Circuit Court of Appeals ruling that the CFPB's funding mechanism is unconstitutional and vacating the CFPB's payday lending rule as a result. Last month, the U.S. Solicitor General responded by filing a cert petition on behalf of the CFPB asking the Supreme Court to review the Fifth Circuit decision. I think we're all interested in that, the Supreme Court action here. But the real problem here, and what we've been saying from the moment of your agency's inception, is this. Why wouldn't the next director with a politically different persuasion not abuse his or her powers with the precedent you've set? The political pendulum does not stop swinging. Next month, there'll be a new majority in the House of Representatives. We look forward to more oversight, and I hope you'll wish you'd tried harder. Well, I know you'll wish you'd tried harder to play by the rules, and we hope you'll change your behavior going forward.
Thank you, Ranking Member McHenry. I now recognize the gentleman from Missouri, Mr. Lukemeyer, who is also the ranking member of the Subcommittee on Consumer Protection and Financial Institutions, for 1 minute to give an opening statement.
Thank you, Madam Chair. When Congress passed Dodd-Frank, there was large concern that the new Consumer Financial Protection Bureau was developed in an unconstitutional manner that opened the door for massive abuses of power. Over the last year, those concerns have come to fruition. Under the direction of Mr. Chopra, the Bureau has shown a willingness to operate and regulate by any means other than those that are legally and ethically appropriate. In contravention to the Administrative Procedures Act and rulemaking process, Mr. Chopra illegally redefines and creates words through press releases, then sues U.S. companies based on those erroneous definitions. While refusing to meet with consumers or industry stakeholders, he instead spends his time undermining other regulators strictly to increase his own perceived power and stature. These actions smack of a person who's either uninterested or too lazy to fulfill his statutory duties as a regulator. The courts have already begun to chip away at the Bureau's illegal framework and actions. It's long past time that Congress does our part. That, Madam Chair, I yield back.
Thank you very much. I want to welcome today's distinguished witness to the committee, Rohit Chopra, who is the Director of the Consumer Financial Protection Bureau. Without objection, your written statement will be made part of the record. You will have 5 minutes to present your oral testimony. You should be able to see a timer that will indicate how much time you have left. I would ask you to be mindful of the timer so that we can be respectful of everyone's time. Director Chopra, you are now recognized for 5 minutes to present your oral testimony.
Well, Chairwoman Waters, Ranking Member McHenry, and members of the committee, thank you for holding this hearing today. Our economy and our consumer finance markets are truly in transition out of a pandemic and further into a digital era. Given the economic uncertainties in today's markets, the CFPB is carefully monitoring consumer finance markets to protect honest businesses, consumers, and prevent the type of widespread harms we saw in the financial crisis more than a decade ago. Over the last year, we've recovered hundreds of millions of dollars in victim redress and penalties. We've sharpened our focus on repeat offenders, those companies that repeatedly break the law, and Congress has directed the CFPB to implement several rules, and we have prioritized getting these done. While we continue to address the challenges consumers face today, the CFPB is also preparing for the future. When new companies can take on incumbents and when consumers can easily switch providers in a decentralized market structure, we are all better off. In October, the CFPB kicked off a rulemaking process under Section 1033 of the Consumer Financial Protection Act. The proposals under consideration would require that firms provide consumers access to their own financial data. Consumers would then be able to provide permissions to this data safely and securely to competing financial firms. The CFPB is also focused on stimulating refinancing, including in auto, credit card, and mortgage, and we've been working with industry and others to find ways to lower barriers to entry and to foster innovation that addresses important market gaps. We're taking a hard look at how big tech and other technology conglomerates are entering payments and consumer finance. Over the past year, we've had productive discussions with members from both chambers and on both sides of the aisle on reforms that can be advanced on a bipartisan basis. First, I'd urge Congress to take action to protect the neutrality of our payment system. Facebook's Libra proposal in 2019 was a wake-up call to policymakers around the world. There's now growing concern about how a small group of payment platforms, including Venmo, PayPal, Apple, Google, are gaining a greater foothold in the payment system. Large tech firms are now the conduit for trillions of dollars in transactions, and the CFPB is conducting an ongoing study into the role of these companies in financial services. The rise and dominance of a small group of tech firms raises questions about how they can suppress, suspend, or even discriminate against certain users over others. The CFPB has even heard concern about payment apps kicking off users or even fining users for their speech. And we've heard concerns about firms abusing their positions to increase fees on small banks, merchants, and consumers. Our nation's payment system serves as core economic infrastructure that should be neutral and non-discriminatory. Congress needs to ensure that tech platforms aren't the ones picking winners and losers. Second, Congress should strengthen financial privacy protections. More than 20 years ago, legislators on this committee and others began raising concerns about the creation of behavioral profiles using our credit and debit card data. Today, with the rise of e-commerce and big tech platforms that monetize user behavior through targeted advertising, these concerns are even more acute. I'm concerned that the notice-based privacy regime of the Gramm-Leach-Bliley Act from decades ago is no longer effective in today's market. Privacy policies for financial services are often all or nothing, and consumers must choose to accept the company's terms wholesale or decline to participate altogether. While Congress is looking at privacy protections across sectors of the economy, I hope you'll consider updating the Gramm-Leach-Bliley Act to provide limitations on the collection, use, and sharing of extremely sensitive personal financial data. There are a number of other opportunities for bipartisan legislative efforts, and the CFPB is eager to work with this committee to craft solutions on these and many other issues. Thank you again for the opportunity, and I look forward to your questions.
Thank you very much, Director Chopra. I now recognize myself for 5 minutes for questions. Director Chopra, this committee has been investigating the collapse of FTX, whose founder, Sam Bankman-Fried, has been indicted by the Justice Department on 8 criminal counts and charged by the SEC with, among other things, concealing a years-long fraud of diverting FTX customers' funds to Alameda Research, his privately held crypto hedge fund. CFPB recently published an analysis of consumer complaints about crypto assets, which found that most consumers complained about rampant fraud, including theft and hacks of their accounts. I've also been concerned about reports of fraud we've seen elsewhere in the fintech industry with companies like Zelle, PayPal, and other mobile wallets, and a lack of consumer protections when such fraud occurs. Over a year ago, the CFPB launched an inquiry looking into big tech payment platforms like PayPal. Would you please share with us the status of that inquiry and any areas of risk and concerns you may have identified?
Well, thank you for the question. I think big tech and other payment platforms entering the payment system raises a host of questions about how banks and consumers and others will fairly participate. We have recently reopened the docket to hear further concerns about consumers getting their accounts frozen or suspended because of their speech or their other activities. This is really a new concept that has unheard of and raises a lot of concerns about people and the payment system. The payment system is not supposed to be one that picks winners and losers. We're also noting that there's an extraordinary amount of data that is being collected about individuals and their transactions. We have heard from many banks themselves about the inability to understand fraud when it comes to the use of some of these apps and big tech technologies. So we will be offering a report on some of these topics. There likely will be a series of analyses we release, and we look forward to working with this committee on how we deal with that. We have to deal with fraud, we have to deal with fairness, and it's not clear to me that consumers should get their accounts frozen or suspended unless there is some indicia of money laundering, fraud, or other unlawful activity.
Thank you. There have been various proposals made to improve the regulation of payments. For example, in a recent Treasury report on digital assets, the Biden administration raised concerns with non-bank payment providers and called on Congress to establish a federal framework for payments regulation to better protect users and the financial system. What issues would you recommend Congress prioritize with respect to legislation to strengthen consumer protection with respect to payments, including digital payments?
Well, I think with respect to stable coins, that's the number one issue that I think would affect consumers and consumer financial protection. Right now, stable coins are not being used really for consumer payments. You know, when Libra was proposed in 2019, I think that was a sign that something like a stable coin could very, very rapidly scale. And so how will we make sure that there are not runs like we've seen in money market funds or even in the recent FTX situation? How do we make sure that fraud protections are in place? And ultimately, we want to have a modern payment system with real-time payments that scales in ways that helps everyone. And ultimately, I think that's a place we would be happy to work with you specifically on some of the consumer protection and fraud-related issues.
Well, thank you, and I look forward to working with you and your team to craft legislation to better protect consumers in our payment system. And now the gentleman from North Carolina, Mr. McHenry, who is the ranking member of the committee, is now recognized for 5 minutes.
Well, thank you, Madam Chair. Director Chopra, I raised this last April about regulation by press release. In your first 6 months, you issue 49 press releases. I just want to understand the internal processes, okay? So you have blog posts. You also have the Administrative Procedures Act. How do you make the distinction for rulemaking on what gets a blog post, what gets a press release, what goes through the Administrative Procedures Act? Walk me through the legal doctrine there, the regulation that you all have established.
Yeah,
It's
so
not clear to me.
I'll try and, one of the things that we have tried to do is try and issue a lot more guidance. That's actually feedback and requests from industry and also from some of you. That clarity we issue through guidance documents, through circulars, through interpretations, and others. We essentially try and reveal, based on feedback from many of you, that enforcement is just one vehicle, but to promote compliance and clarity, to also be able to provide more transparency on how we interpret rules. None of the guidance documents commit institutions to new obligations. They're supposed to restate.
Are those legally
existing law.
enforceable, though? Is that guidance legally enforceable?
So guidance does not create any obligations under the law. They're
So you
supposed to
would tell
restate-
folks,
Sorry.
you would tell folks that look at new guidance that's issued maybe this morning, that has no new force of law, no new obligation on them. It's just guidance.
The things
Just
that
something they
have
can reference or
obligations
not
under
reference.
the things that have obligations under the law are statutes and regulations. We publish.
What is a
wide-
blog post?
Well, a blog post or any posting on the website is supposed to communicate and be transparent. In fact, we've gotten requests to publish
understand,
more
you are a-
information about what we are doing.
As a regulator, when you put out a blog post, you're telling me that does not have any enforcement action, no enforcement action would be taken off of a new blog post?
I don't know if I totally follow what you're saying. The only enforcement that you can enforce is a statute and a regulation. So in our complaints, when we file an enforcement action, it cites particular statutes and particular regulations.
Okay, so
in certain
as an
statutes,
example-
like the Fair Credit Reporting Act, there are different ways in which they define guidance. We try our best to look at each of those statutes.
We have other regulators that have been doing this stuff for 100 years, right? And your approach at the CFPB is novel, it is new. We don't see the like-kind actions from other agencies. So just as
Well, I would just disagree. I think
as an
many
example.
agencies publish things on their website, blog posts, letters, other things, to provide information to the public about how
So
certain
that's
rules and
significant. Like,
regulations.
what agency would you reference that is like kind of what you're?
Oh, we
what-
would,
what
we
you
can
do?
provide you a list. The Treasury does this. We see this from also the Education Department, the Labor Department, the Homeland Security Department. There's many ways in which they communicate to be
Sure.
able to
So
provide
let me get
clarity.
into this. So you have the non-bank supervision. So you have a rule for non-bank supervision. Is that going through the Administrative Procedures Act, or does it not have to?
So the non-bank under section, I believe, 1024, this is about how the procedures that the CFPB will use in order to define that. It was not required to do a rule. We provided and published a procedural rule so that entities would know, how does this work? What should they expect?
Did you get feedback on that?
We
on
did,
that?
and
you
it-
did?
yes, we
And
did.
so there was clarity by the industries that are going to be affected before you posted that?
So we published the procedural rule and asked for comment on it. We received comment, and we also published an update to reflect to respond to those comments and reflect the
But I just want to close here. So in your view, guidance is not legally binding. Is that true? Is that
Statutes and
correct?
regulations are what is enforced.
No, but I'm
Guidance,
asking
bulletins,
I've asked,
other things
are not
this is
legally-
This is not something you can plead in a courtroom.
but let me just ask, is guidance legally binding or not?
No. Generally
thank you.
speaking, guidance is supposed to provide interpretation, and what you plead in an enforcement action is statutes and regulation. Guidance can sometimes help in an enforcement to show notice, to show other factors.
Well, that quote-unquote help has had a negative effect on consumer protection. I yield back.
Thank you. The gentleman yields back. The gentlewoman from New York, Ms. Velasquez, who is also the chair of the House Committee on Small Businesses, now recognized for 5 minutes.
Thank you, Madam Chair. Director Chopra, the Bureau's Section 1071 rulemaking is an issue that you and I have spoken about several times. According to publicly available material, the Bureau is on track to issue a final rule by March 31st, 2023. Is this correct? And do you expect to issue a final rule by this time?
That's right. The Bureau was sued a few years ago for not implementing that rule, and we are under court supervision to complete it by March 31st, and we will adhere to that court supervision and get it done by that date.
Thank you. And in 2012, the CFPB created the remittance rule, which was a monumental step in protecting the millions of Americans utilizing remittances from hidden fees. While the rule makes a positive impact by requiring providers to disclose certain fees, consumer and immigration groups have found that remittances still lack full transparency. Providers can still hide fees in the exchange rate and force consumers to unknowingly pay higher costs, resulting in Americans losing $8.7 billion in hidden fees per year. Has the CFPB considered strengthening the remittance rule to better protect consumers and working-class families from these hidden fees?
Well, let me just say, Congresswoman, that when someone is sending a remittance, the cost to them is a mix of any immediate fee plus any exchange rate delta. And in many cases, the consumer cannot really know how much money is always going to end up on the other side. So this is a place where we're starting to see some more digital apps and others try and compete more. We think that's a good thing. But ultimately, the exchange rate opacity is a concern, and we are going to continue to look at all the players and what would be ways that the exchange rate transparency can be better.
Okay, Director Chopra, I would like to work with you on this issue going forward. Earlier this year, I wrote you a letter on the lack of information the Bureau has published pertaining to Puerto Rico and the other territories. In your response, you stated that you will direct staff to find opportunities to incorporate data for Puerto Rico and the other territories in reports and other data products. Can you explain how you are intending to carry this out, and what type of information should we be expecting?
Well, I appreciate that. Puerto Rico, I think, if ranked by population, would be maybe the 30th or 31st largest state. So what we are doing is, particularly in our analysis of credit reporting data, other loan data, we're trying to use that to see in our reports, can we make sure that every territory has some specific information, just like we have 50 state information. We also particularly want to look at overseas military personnel to figure out their unique experiences. So sometimes it's a challenge because we rely on Census Bureau data and other data published by other agencies. My understanding is some of them are also looking at enhancing data on Puerto Rico and the territories. So we will continue to find ways to make sure that every American is really, we are able to understand what is going on.
And are you working with other federal agencies and departments to acquire this data?
So generally speaking, we work with the Census Bureau. We work with really publicly available data sets. I can't speak off the top of my head about what discussions there have been on an interagency basis about more data publicly available on the territories. I'm happy to follow up with you on that, but I think the spirit of it is that all of these are American citizens, and the more we can make sure that we understand what is going on and how it might be different from the 48 states, that feels from the 50 states, that feels very important.
Thank you. I yield back. Thank you.
Thank you. The gentlewoman from Missouri, Mrs. Wagner, is now recognized for 5 minutes.
I thank you, Madam Chairwoman, and I'm going Director Chopra, follow up on, I think what you're going to hear is a mantra from our side, and we're hearing from industry and investors and others. You've clearly chosen to regulate by press release, guidance, and enforcement action instead of through the traditional Administrative Procedure Act, the APA, through that process. These actions show an intent to, frankly, subvert the notice and comment procedures of APA that provide accountability and improve rulemakings. Since your public statements are not rulemakings or official actions, and your guidance is not legally binding, as stated by yourself just previously with the ranking member's question, do you agree that financial institutions and firms are within their right not to adhere to your proclamations?
So, Congresswoman, I would characterize it as
That's
existing.
a yes or no, sir. That's a yes or no question.
Well, those are existing obligations under the law. So one of the things that you have actually shared in the past is a concern about so-called regulation by enforcement. I take that very seriously. So what we have done is make sure that any of those potential enforcement actions, any of those interpretations, we could bring an enforcement action. But what we have tried to do is issue much more transparency about how we believe existing situations in the marketplace would apply to the existing law. We also use this in talking with members of Congress where you all believe there should be changes in interpretations and statutory changes. We try our best to say what
Reclaiming my
does the
time.
existing law-
Reclaiming my time. Are these financial institutions and firms, are they within their right not to adhere to your proclamations outside of the APA? Yes or no?
Every single institution has the right to challenge in an enforcement action.
Oh, good
and
heavens.
say
All right,
that our
enough. I'm reclaiming my
interpretation is
time.
incorrect.
To reiterate for the record, will you commit to not bringing enforcement actions against financial institutions and other market participants that do not comply with any decree other than APA rules?
We will enforce the law as written. The law and statutes are crafted by
That's
Congress.
why the
and that's-
APA is there.
No, statutes are developed by Congress. When there's additional obligations or requirements to conduct rulemaking, we absolutely do go through that process just as we did through Ranking Member McHenry's Debt Bondage Repair Act, as we're doing in Section 1033, as we're doing in Section 1071.
Does the Bureau's
as we're
Communications
doing on the PACE
Department
rulemaking.
have a role in shaping policy through press releases or on-the-record comments?
I do not know. The interpretations of policy are made by all sorts of individuals.
All right, again, no answer to the question. Director Chopra, you recently indicated through a blog post titled Rethinking the Approach to Regulations that you would pursue, and I quote, simple and straightforward terms, basic bright line guidance and rules, and clarity and simplicity in rulemaking. Those sound like great principles, sir. Would you give specific examples of how you have implemented this change so far, and how do you plan to continue providing these simple and straightforward terms?
We're happy to provide you a list. I'll give you some examples. One example is that we have received questions from industry participants about the use of certain algorithms and automated decision-making. We have made clear that those are usable when you can comply with the adverse action notice under Regulation B and under the Fair Credit
If you could,
Reporting.
Director
A clear
Chopra,
statement of-
just provide me with a list. I have another question here. I'm very concerned that the proposed small business data collection rule, Section 1071, which would impose new reporting requirements on lenders, will have an unintended result of increasing origination costs and decreasing access to credit for businesses that need loans the most. How has the CFPB adhered to these principles when working to finalize a small business data rulemaking?
I think bright lines are always the best. Sometimes Congress doesn't pass statutes with bright lines. In the case of Section 1071, Congress did specify a whole host of factors and delineations of what data should be collected, and we are under a court order.
I hope you will commit to those
implement that.
principles when taking future policy actions, and I yield back, Madam.
Thank you. The gentleman from Texas, Mr. Green, who is also the chair of the Subcommittee on Oversight and Investigations, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Mr. Chopra, for appearing today. I compliment you on the work that you've done, and I do so because I was here in 2008 when we had the downturn in the economy. I remember a time when banks would not lend to each other. I remember a time when we had the dastardly yield spread premium as a norm. I remember 327s and 228s. It was a time of open season, it seems, on consumers. But the Consumer Financial Protection Bureau has made a difference. And this is why I support an independent Consumer Financial Protection Bureau that doesn't have to depend upon the vagaries of Congress for its funding. A Congress that has difficulty funding the federal government. A Congress that has difficulty raising a debt ceiling so that the United States of America, the greatest country in the world, will not be perceived as a deadbeat nation. The independence is what makes the difference. Give us the purse strings, and you'll see a change in your ability to move forward with the actions necessary to protect consumers. So here's my one question. Assuming that Congress controls the purse strings and there is a sharp cut in funding to the CFPB, how will this impact consumers?
Well, ultimately, a CFPB that is robust and reliable is the best thing for consumers to avoid some of the horrible things that you referred to in the mortgage crisis. It's also very critical for industry participants. We provide the framework that has served as safe harbors in mortgages, in what they can rely on in debt collection. It would be chaos if there was not an orderly way in which these critical rules are administered. You know, the mortgage crisis was such a lesson, I think, for so many people about what happens when you don't have an orderly system to protect consumers. Consumers are ultimately deeply intertwined into broader financial stability and economic stability. They go hand in hand. So I really think a strong and independent CFPB, just like the Federal Reserve Board, just like the other bank regulators for 150 years, it seems really unwise to create chaos by dismantling that.
And to this end, the notion that it could be dismantled, what would it do just for people who are in the business of acquiring a loan? How could that be adversely impacted by our sharply cutting funds?
Well, you know, we've heard, they've said it publicly, the mortgage industry, about the real problems of not having the CFPB and its rules to make clear about what is the two-way obligation between homeowner and mortgage lender. If we want housing and mortgages to be robust, if we want that to be a vehicle for people to get ahead in life, I don't see how throwing huge amounts of uncertainty in that will help anyone. So I really hope that we can make sure that consumer protection is a way to make sure there is a fair market system with obligations on both sides.
Thank you. And with my last few seconds, Madam Chair, I do want to compliment you on your leadership in this Congress. We haven't done all of the things that we wanted to do, but we've done some remarkable things under your leadership. We've improved housing for many. We have helped many persons who find themselves living in the streets of life, and we've not done enough. We want to do more. But I compliment you on what you have done. You've made a difference. And I thank Mr. McHenry for being kind today and look forward to working with him in the next Congress. We can do this. We but only have to have the will. The way is before us. I yield back.
Thank you. The gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Madam Chairman, thank you very much. Director Chopra, thank you for taking time to be here, and thank you for taking time to come and shake our hands before we began today. The Chairwoman asked us if we would take the opportunity to offer feedback about the things which we perhaps disagree with or that we would like to include, and one of them is, that has been briefly discussed today. We don't need to get into it, but what we consider to be from the federal court here, the Court of Appeals here in D.C., that the CFPB is unconstitutionally constructed. And I heard you refer to the CFPB in the same terms as other boards, but that have 5 or 3 members on them, not a solely constructed, nor are they given the status of using the money that they would choose. Secondly, that we would get into what some history has been, although I don't know lately what an IG may say, but about a toxic workplace that the CFPB has been and may still be involved in. Director, I found your words pretty interesting. You talked about the critical role, an orderly system, and avoiding disruption and chaos about the things when you use the internet platforms to perhaps give advice. I just want you to know, I consider that, as the gentlewoman from Missouri spoke with you, we need a direct answer, because people really are trying to, if they intend to comply with the law, they don't need to be sitting on the internet taking your advice or consent or whatever you would give, as opposed to structurally the law. We deal with lawyers who look at words, who understand what those meanings are, and next year, our young chairman will engage you again, and I thank everyone on this committee. Director, as I told you when you walked by, in your testimony, you have pointed out in recent years that big tech companies and other digital giants have leveraged their existing platforms to expand their reach into banking and finance. What is your working definition of big tech? And when you're deciding which of these tech companies you would have in mind, it allows us to know more about what you're thinking. So, Director, I would ask that question with 2 minutes and 25 seconds left for you to respond.
Sure. Let me just say one thing, Congressman, that the CFPB has in many ways a similar structure to the Office of the Comptroller of the Currency, which is led by one person. The Federal Reserve Board of Governors have the same exact funding system. I acknowledge they do have multiple members. This has been addressed in the Supreme Court, this question. With respect to your question on big tech, you know, the Treasury Department, the Financial Stability Board, and others also use this term. It's generally meant to convey the very largest technology conglomerates that operate globally, but particularly have scale and network effects, whether it's in social media, in mobile operating systems, or other key platforms. When there is the introduction of these firms who have many, many other businesses into the payment system, that has typically, as you know, banks really aren't allowed to have side businesses and ancillary businesses. They're really supposed to, when moving money, move it from point to point. They're typically not allowed to have their own industrial businesses. And they also typically don't harvest enormous amounts of information to preference their other businesses. And so what you're seeing in big tech firms is really they have enormous power to elevate or suppress some users over others. I think that's very scary. And I think in the context of payments, payments are really about moving money from one place to the next. It's really not supposed to be about elevating someone or the other. And of course, there is room for detection of fraud, preventing money laundering. But I think we have a lot of tough questions to deal with. We've seen class action lawsuits by credit unions and small banks about some of these payment platforms operated by big tech companies, and there really is a host of issues about how really do they make decisions, how are they using our data, and how might it be disadvantaging banks, merchants, and even consumers.
Director, thank you very much. I would assume we will follow up next year with you to gain more insight into your discussions about that, whether it's on the internet or whether it's in rulemaking. Thank you very much. Thank you, Chairwoman.
Thank you. The gentleman from Missouri, Mr. Cleaver, who is also the chair of the Subcommittee on Housing, Community Development, and Insurance, is now recognized for 5 minutes.
Thank you, Madam Chair, and I will try to do this quickly. I want to follow up on what Mr. Green said earlier. We were all here, Mr. McHenry, on down this way, we were in here. We met almost every single day, and I was reminded of President Bush's Secretary of the Treasury coming in that door and held up a few sheets of paper and asked for $850 billion, I think, or close to that. And Mr. Oxley and Barney Frank worked hand in hand. This committee held the fate of the U.S. economy in its hand. And so we worked together. And the CFPB was created not out of any partisanship, but we wanted an agency where the people got up every morning with one thing in mind, and that was protecting the consumers of the United States. That was it. And I'm glad we did it. I want to move now to the contemporary issues that we're facing. You know, we had the dollar was backed by gold, and then I guess it switched. I mean, it was kind of suspended 2 or 3 times as the value dropped. And then under, I think in the 1970s, I think under Richard Nixon, we started, the dollar was backed by fiat currency. And so I'm thinking now, what is all of these digital assets backed by? Can you help me? How is that? What backs that up?
Well,
The full faith and credit of the United States backs up the dollar. So what backs
well, the
up?
CFPB, I think, thinks about this in terms of payments. And while these digital assets are really not used as a payment instrument now, certainly we all have to be thinking about, could it be and when will it be? And so if there is a dollar-denominated stable coin, there's obviously going to be questions about what is it backed up by? Does it have the right liquidity? Could there be a run on it? Would there be fire sales? So obviously, as this committee thinks about stable coins, the issues of run risk and fire sales, when people can't access their money, the CFPB has experience with this in the prepaid card context, some other contexts, it is hugely catastrophic to an individual family when they can't access their own funds in their deposit account. And so to the extent to which people are relying on that safety and security, you know, apps like PayPal, Venmo, others are very, very heavily used. Many consumers are not aware that those funds that they have there may not be insured by the FDIC. So there's lots of changes in the market, and to make sure we're trying our part where we have jurisdiction to provide that clarity, but I think there's a lot of work for the regulators and Congress to do across the board.
Well, thank you. I referred to cryptocurrency yesterday as a creepy dough. I mean, dough, I grew up, you have some dough, money. And so as a result, before nightfall, we had all of these new creepy dough assets being promoted, and one of them, as of this morning, is worth $613,000 overnight on something that doesn't even exist. It's something I said in a committee hearing, and it's trending. I mean, people are getting people's money. I mean, this is dangerous, and we have got to do something. And I'm willing to whatever we need to do. And do you have any ideas what we need to do?
Well, again, we're focused on payments, and right now it's not in consumer payments, but we are really happy to work with you to figure out how to make sure that if it is ever used in consumer payments, what's the right way to make sure that we don't see a repeat of some of the problems throughout history.
Thank you very much. Thank you, Madam Chair.
Thank you very much. The gentleman from Missouri, Mr. Lukemeyer, is now recognized for 5 minutes.
Thank you, Madam Chair. Director Chopra, in October this year, you issued guidance on overdraft fees. In that guidance, you stated there are 2 junk fee practices that are likely, unfair, and unlawful under existing law. I'd like some clarity here. This guidance seems to say that something that was legal yesterday is illegal tomorrow. A couple different things with this. You're trying to use guidance to determine whether something's legal or not. He just said in answer to Mr. McHenry a while ago that you can't do that, number one. Number two, you're trying to do something at overdrafts. You have no authority over overdrafts whatsoever. And number two, you use the word likely in your comment there, which there's no certainty to, but yet you infer something and you try to undermine people's confidence in what they're doing. Tell me what's going on there.
Sure. So with respect to those guidance documents, here's what I'd say. There was no change in obligations whatsoever. The rules the day before were the rules the day after.
Okay, let me interrupt right there because 30 days before you issued that, you took an enforcement action against the company. How does that work?
Well, that enforcement action was against Regions Bank, who was repeatedly on notice.
You use this guidance to go after them.
Oh, no, that's not true. The guidance
What did you
was not
use?
cited in the
What was you
enforcement
used to go
action at all.
after?
The enforcement action in the complaint outlines the violations of law and regulation. It noted that the entity was actually already aware of the issues expressed by the regulators. So there was no, and in fact, these guidance documents are very similar to what has been issued by state regulators.
Yeah, but you're conflating things here. We're talking about guidance, you're talking about something else there. Number two, in your statement here, you talk about junk fees. There is no such word in financial services lexicon. You just made that word up, sir, or that phrase. And you can't be, you're not a legislator. We're legislators here. We make up these words and define them in law to make sure that they're fairly adjudicated, to make sure that the law is actually determining what's going on, and use a word and define that word to make sure we have the law correct. You're making up a word and then using it to go out and enforce something that doesn't exist. You know, this is scary stuff that we're looking at here today.
Can I just say for the record that you mentioned that the CFPB does not have any authority with respect to overdraft fees? I just want to state for the record, all of the rules related to overdraft fees that the Board of Governors of the Federal Reserve System promulgated under the Truth in Lending Act and others are under congressional mandate, enforceable, and
I would argue against that point, but let's move on. I get a lot of questions about your inability and your unwillingness to meet with my constituents, industry officials. You know, there's a huge lack of transparency with regards to your schedule.
that's not true, sir. I have met more than both of my predecessors.
Well, let me just show you a copy of your schedule here, sir. There's a copy of one of your days. Here's a copy of 2 or 3 other days. There's nothing on there. You talk about a meeting, but there's no description of what kind of meeting you have. It could be a staff meeting. I don't know. There's no meeting on here. Do you understand what the FOIA Act is all about? There's an article here just this week with regards to the Securities and Exchange Commission Chairman Gensler, who is scrubbing his meetings to make sure that people don't know he met with Secretary of State Clinton and billionaire donor George Soros. Are you meeting with those sort of people that hiding that information from the public?
We publish our calendar publicly.
Mr.
We
Chopra,
have
I've
for
got your
years
calendar and it's
years
not
and
on there,
years.
sir.
Well, if
There's
there are
nothing there
things-
except says
I'm
meeting
happy
with no
to look-
description.
I'm happy to look at any specific days. It is true that meetings about particular enforcement actions, about particular supervisory matters,
Mr.
about
Chopra,
things that are
we're going to
protected-
request from you an entire year's worth of meeting descriptions because they are not here. And then I want to tell me, explain to me how many different industry folks that you met with, how many constituents you met with over the last year, because I can tell you not one single one coming to my office has ever said, yes, we had a meeting
Well,
with,
we have met-
with you.
With me, I
Yes.
have personally met with, I believe, 21 state banker associations, and I believe a
From
dozen
this
state
right
credit
here,
union leagues.
40% of your time over this year is nothing. There's nothing on this calendar.
Well, I have done
show that
more
that you're doing
industry
things.
outreach with those affected by the CFPB than both of my predecessors. I understand that it's not just large institutions
Mr. Chopra, it's
that
your
have to
job
work
to
with
meet
us,
with the very
but-
people and industries that you oversee.
Well, if there are
And
entities
and your
in your
meeting
state
schedule
that you'd
doesn't
like
show
me
that's
to
going
meet
on.
with, I'm very happy to do that, sir.
Thank you. You shall receive a letter from us. I yield back.
Thank you very much. The gentleman from California, Mr. Sherman, who is also the chair of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, is now recognized for 5 minutes.
I would comment that I don't release a complete schedule of who I meet with, and I doubt most members of this committee do as well, though I'm happy to meet with both George Soros and Hillary Clinton at any time. The gentleman from Missouri pointed out that I guess Creepy Dough has a value of over $600,000 supposedly. I want to relate the fact that the same thing happened in this committee room, what must have been 8 or 10 months ago, when I indicated that I thought crypto was kind of silly when, and maybe the next coin would be a hamster coin. My staffer tapped me on the shoulder after a hearing in, I think it was March of this year, and told me, boss, there already is a hamster coin. Then I said, well, okay, what about Cobra coin? He tells me there was a Cobra coin, so I came here and I said, well, what's Mongoose coin going to do with hamster coin and with Cobra coin? And by the afternoon, they had created Mongoose coin. And I shouldn't say this, but I think the Mongoose coin at one time was more valuable than the Creepy coin is today, but Creepy coin could go back up, so we'll have to see. A lot of discussion about crypto is about payment systems. We do need to improve the payment system, but it should be a system where you pay in dollars and you know your customer. But it shouldn't, small businesses shouldn't be paying 3 or 4% when you use a credit card. I realize there's a bad debt risk on the credit card for the credit card issuing company, but they charge plenty of interest from the consumer to cover that. I think we talked privately about Dodd-Frank Section 1071, which requires financial institutions to compile and maintain and submit data to you. And I asked you when those regs were coming out, and you said by the end of March. Did I get that right?
That's right. We will issue the final rule on Section 1071 on small business lending data no later than March 31st. We are under court supervision to complete it by that date. It is a long overdue rule. It's a tough one for sure, but we will complete it based on the court's order.
And one particular thing to look at there is often the auto dealer is acting as an agent for a lender. The auto dealer isn't under your jurisdiction, but the lender is. The lender may be required to compile this information about the race, et cetera, of those applying for a loan, but the auto dealer may be prohibited from asking. So I hope that you would work this out and make sure you don't have a circumstance where the lender is required to report that which the auto dealer is required not to ask. Now, every time I buy a car, I do it face-to-face, and I guess they can tell what my race and gender is. So I don't know why there's any law prohibiting the auto dealers from asking, but I'm told that there is. Move forward to PACE. In May of 2018, Congress passed and the president signed a law that you would promulgate rules dealing with these PACE loans. There has only been an RFI from your predecessor. That was back in 2019. When will you get those PACE loans out and at least make sure that if there's an ability to pay before people sign up?
So you're right that that rule has not been implemented yet. I'm planning to propose it this spring, hopefully by April or May. The goal would be to get the proposal out and to be able to finalize it in a reasonable amount of time.
Going to try to sneak in one more question, and that is on appraisal management companies. We've seen these articles where appraisers come to different values on the home based on the perceived race of the owner. I don't think that would happen in LA where we have tract homes, but appraisal is more of an art here where the homes are less uniform. So there can be bias, there can be other areas with these appraisers. They are set up by these appraisal management companies. What oversight is there for the appraisal management company industry? You plan to look at this area?
So it's pretty complicated how the appraisals piece works. I don't have much time, but I do think we need to work with Congress to make sure there's good availability of appraisers in rural and urban areas alike, and that we focus on accuracy. Undervaluation and overvaluation are both problems. We've seen how it can be problematic in the financial crisis, and making sure good, robust, independent appraisals are to the whole housing system.
Thank you.
The gentleman from Oklahoma, Mr. Lucas, is now recognized for 5 minutes.
Thank you, Madam Chairman. Director Chopra, could you describe how you engage with the Federal Reserve, FDIC, OCC, and NCUA to ensure that the CFPB's approach to regulation is in line with their safety and soundness objectives?
It's a great question. So there's no, safety and soundness and consumer protection absolutely go hand in hand. There's some formal ways in which we gather their input and make sure they and we, our staffs, can really understand the nexus of some of those issues. Those formal consultations certainly occur in the context of rules and other similar policy making, but also as it relates to official votes the CFPB is required to make on different bodies, including the Financial Stability Oversight Council. The FSOC itself is able to overturn CFPB rules pursuant to the statute if any of those rules might pose a threat to safety and soundness. So of course, this is a huge issue that we really work closely with all of those agencies to make sure that consumer protection and safety and soundness really go hand in hand.
The reason this comes to mind, Director, last month the Fed and FDIC announced the results of their resolution plan review of the largest U.S. financial institutions. And I believe you released a statement that had a quote that was to the effect, "It is highly unlikely that any of these institutions, as currently constituted, could be resolved in a rapid and orderly manner under the bankruptcy code." Would you mind elaborating to us on this? And should your statement be viewed as a criticism of the Fed and FDIC for not identifying shortcomings in all of the resolution plans?
Thanks for the opportunity. So as you know, and actually Chairman Henserling, whose painting is right there, was very, very critical, and I shared that criticism about bailouts. And one of the things that Congress did is it basically said, we don't want to do bailouts anymore. We want to make sure that when large financial institutions get into distress, they can resolve themselves through Chapter 11 of the bankruptcy. And they require the regulators, and I had to cast a vote about whether or not the plans that were submitted by the globally systemically important banks could be resolved in bankruptcy. I agreed with the FDIC and the Fed that there was an institution that was deficient on this front, but I more broadly was questioning some of the assumptions on Chapter 11 of the bankruptcy, and in fact, members of this side of the aisle have also questioned whether Chapter 11 is really realistic for a very, very large firm to go through bankruptcy. And in fact, the firm suggests that they will self-finance their bankruptcy. That's really not a thing that we see in the rest of the economy. So ultimately, an orderly resolution that avoids bailouts, and I think bailout risk is really the key here, Congressman Lucas. We do not want to be in a position where we have to bail out a large firm. We want it to be resolved in an orderly fashion that does not disrupt the entire capital markets, disrupt access to credit.
So,
and this is
Director-
an unfair subsidy that small banks don't really get if you can't be resolved in an orderly fashion. So I voted on it after reviewing the plans, and it is typical to issue voting statements with those.
So, Director, what kind of interaction have you had with the Fed and FDIC after your comments, and how have they responded to your quotes?
I think it's an ongoing question about in the next submission of resolution plans. If you look at the feedback letters that the agencies provided to the globally systemically important banks, I think we're moving in exactly the right direction. Is it theoretical or is it realistic? We're going to be doing capabilities testing by the Fed and the FDIC and making sure that this is not a fairy tale, but it's really grounded in business realities and the Chapter 11 process.
One last question. In your recent budget request to the Federal Reserve System, it is much higher than any other fourth quarter request, which typically is the largest request of the year. Can you elaborate on this budget request? Does it indicate that CFPB may undertake significant rulemaking requiring more resources in the near future? Do you need more money because you're going to crank out more rules?
No, I think there is some seasonality to our spending. And so I'm happy to look at the numbers and take a question for the record on this, but we do look at our needs and then we make that request in order to manage our Treasury cash flows appropriately.
It is an amazing system you operate under. Thank you, Mr. Director. Thank you, Madam Chairman.
Thank you. The gentleman from Colorado, Mr. Perlmutter, who is also the chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Thank you, Madam Chairman. Let's first correct the record on this creepy coin. Creepy coin is today, or at least according to that chart that Mr. Cleaver had, is at 8 cents. They did $613,000 worth of trades on that coin yesterday. So it's not worth $613,000, but it's been trading, just so that record's clear. Now, the thing I really want to talk about is something you and I have spoken about, Mr. Chopra, and that is enforcement versus guidance. Because I think my friends are really going down the wrong path here, and I might remind them that Mr. Huizinga and I worked with the CFPB on this subject because Mr. Huizinga had a constituent, a title company, that just got clobbered. They were enforcing and through the industry by bringing this big action against a small title company. And we said, and they were sued for $500,000, ultimately settled for $50,000 after I don't know how much in attorney's fees. And they said, why don't you just give people a heads up before you bring the enforcement hammer? And that's precisely what I think the CFPB is trying to do now. Look, I'm going back to practicing law. I'm happy if they enforce everything because it's going to be more business. All right? That's the problem here. You want to get the heads up and you want to get the notice. So I'm going to let you have a little bit of say as to why you've proposed and why you're providing guidances to give the different industries, different groups, different banks, different title companies some notice as to what you're thinking about particular regulations and statutes.
Well, Director Kraninger, my predecessor, established an advisory opinion program to be able to provide the CFPB to provide clarity on where it would exercise its enforcement and rulemaking. And let me just say, Congressman Perlmutter, the CFPB is not strong-arming small businesses anymore, like I see at the other agencies. The Federal Trade Commission is notorious in years prior for focusing on small businesses. We are focused on repeat offenders, the largest players, many of which who have ample resources to fight us, and they do. And I'll also add that regulators should not be in the business of increasing the costs of lawyers. When we issue guidance, we hear from firms, actually, this is another reason that I don't need to hire more outside attorneys. I realize outside attorneys probably don't like that. They like the any time that they can create uncertainty. We want to provide the clarity, and maybe firms don't agree with it. They can go to Congress and change the laws. We try and offer existing legal interpretation about obligations today. Where we are seeking to create new obligations, we go through the rulemaking process and we focus on large market actors, and that's why we're litigating more. We are often
So
getting
let me
court-
stop you. So I was looking through the booklet that we all got. I mean, there must be 50 big cases that are either pending or have just been settled. Am I wrong about that?
That's right. We have a lot of litigations. We are in court in many places all over the country. There are, of course, some smaller fraudulent actors. We have continued to litigate those, but our enforcement emphasis is on bigger players that repeatedly
Well,
break.
but the bottom line on the enforcement and the guidance, and I agree with their points, guidance isn't the law. The law is the statute, the law is the regulation, but the guidance gives somebody a heads up, gives them notice that, look, we think there are problems in this area. This industry should, be prepared or be aware, or clean it up if they want to, or no, say we're not doing anything wrong, and okay, fine.
And we have actually found that in many cases, offering transparency in what we're finding in our examinations, it's allowing other firms to gut check, might their systems be misprogrammed? Might they be doing something different? This is what we're seeing, for example, in auto repossessions. We found that there was a number of places where there were unlawful repossessions, and we're hearing firms saying, after you issued your bulletin, we looked at our systems to figure out how we can reduce that and stay in compliance. So that transparency is something industry asked for, at least they used to ask for publicly, but privately they continue to ask for it. So we are trying to do our best by responding to the concerns about enforcement attention and with about clarity.
All right, thank you for your answer. And if you go back to enforcement, it'll be okay to me because I'm going back to practice law. See ya.
Thank you, Mr. Perlmutter. The gentleman from Kentucky, Mr. Barr, is now recognized for 5 minutes.
Thank you, Madam Chair, and Director Chopra. Your statement that the Bureau is focused on enforcement of against only the largest firms is curious because the Bureau has recently told a very small consumer lender to sue in order to find out what they allegedly did wrong. So that doesn't really square with your statement, but let me focus on the Fifth Circuit decision really quickly. Director Chopra, are the funds of the CFPB congressionally appropriated?
So the question of whether it meets the appropriations clause of the Constitution, which says no money shall be drawn from the Treasury but in consequence of appropriations made by law, that is the subject of a Supreme Court petition by the Solicitor General. That is an open issue.
Yeah, and the Solicitor General on your behalf says that the CFPB's funding statute indisputably establishes an appropriation under the long-accepted understanding of that term. Let me read to you what the Fifth Circuit says about that argument. It contends that there is no constitutional infirmity because its funding scheme was enacted by Congress. In essence, the Bureau contends that because Congress spun the agency's funding mechanism into motion when it passed the act, voila, the appropriations clause is satisfied. The Bureau's argument not only misreads Supreme Court precedent, but also the plain text of the appropriations clause. What is that clause? No money shall be drawn from the Treasury, but in consequence of appropriations made by law. And the Fifth Circuit says this: a law alone does not suffice. An appropriation is actually required. So, again, are the funds of the CFPB congressionally appropriated or not?
So you should look at the Solicitor General's opinion.
I have.
That is the best and most authoritative view of the
Well,
United States and the
let's go-
executive branch. And our funds are it's the same funding as the Federal Reserve Board.
Double, and you're double insulated because you get your funding from the Federal Reserve. But Mr. Chopra.
Federal Reserve Board is funded
Mr.
the
Chopra,
same way.
reclaiming my time. In 2012, the Bureau's first director, Richard Cordray, testified that the revenues were, quote, non-appropriated funds. He said what is obvious to everyone. The Bureau has released 3 public reports that state that the funding for the Bureau happens outside of the traditional appropriations process. Last year, you testified that the base level of funding is, quote, guaranteed by statute. That doesn't sound like the appropriations process. What is your position, sir?
Is this a trick question?
No, it's not a trick question.
The answer is very clearly outlined in the Solicitor General's opinion. We believe the Fifth Circuit opinion's ruling is not correct, and we have,
Okay.
the Solicitor General has petitioned this issue. There are many, many.
Director
Farm
Chopra,
Credit
reclaiming my time, if the Supreme Court does what it will do and affirms the Fifth Circuit's decision, doing not the absurd thing, as the chair says, but actually the constitutional thing, which is to vindicate the separation of powers, I want to know, are you going to support my TABS Act, which would put the Bureau under congressional appropriations to save your agency?
Well, we will comply with whatever the Supreme Court rules. We always work with everyone on any
Okay.
potential legislation.
Reclaiming
Of
my
course,
time. Your exam manual updating the interplay between UDAP and anti-discrimination statutes. Do you believe your exam manual fills gaps where there is presently no specific anti-discrimination law like the Fair Housing Act or the Equal Credit Opportunity Act?
Well, the prohibition on unfair acts or practices has 3 prongs. Some of the
No.
conduct that may be
I don't have much time,
discriminatory
Director.
may
Does it
trigger-
fill gaps or not?
The law is
Let me
the
ask.
law.
Let me ask the question a different way. You say in your press release in March, examiners will require companies to show their processes for assessing risk and discriminatory outcomes, including documentation of customer demographics, et cetera. Were companies required to do that before your exam manual
The
update?
manual is guidance for examiners.
Were they required to do that before, Director?
The examiners are the institution.
Did
There is no-
examiners, before your update, did examiners look for disparate impact in conduct not covered by fair lending laws?
Disparate impact is not a theory of liability under unfairness. Unfairness has substantial injury, reasonable avoidability.
Director, reclaiming my time, and I'm running out of time. You're changing the law. You're
I'm not
changing the
changing
law
the law.
without
You
Congress.
change your
And
job
you
is to change the
and
law.
you are changing the law without Congress.
I'm not.
Yes,
It's
yes,
existing
you are.
law.
These are obligations not previously required. And you think you're Congress. You are
I
not.
don't. You're Congress,
You
and
are
if you wanna
not.
change the
This
law,
is not
we will work.
interpretive guidance. You're trying to change the law.
Not true, sir.
I yield back.
The director's position is clear. This case of whether or not you have to go through the appropriations process is on appeal. Is that correct?
Yes, ma'am.
All right, the position is clear. All right, with that, the gentlewoman from Ohio, Mrs. Beatty, who is also the chair of the Subcommittee on Diversity and Inclusion, is now recognized for 5 minutes.
Good morning. First of all, let me just say thank you to you, Director Chopra, for speaking with us today and for everything that you do at the CFPB to protect consumers and to ensure fairness in our financial system. I cannot begin to tell you how honored I am to have someone who understands protecting our consumers and putting them first. We've had a lot of work that we've had to do in the past, especially under the last administration. I want to commend your organizations for its efforts to boost contracts with minority and women-owned businesses. According to the report, 27% of $96 million in contracts went to these firms in the reporting period. As you probably will be reminded, every director who has an OMWE office, I have said to them the value of making sure that they follow all of the guidelines that our chairwoman fought so hard for to get Section 342 in the Dodd-Frank Act. So it's good to see a director who works well with OMWE and is able to report back what you did. Secondly, under your OMWE implementations, I was very pleased to see that you implemented the Persons with Disability Action Plan last year to address these barriers. We did the same under the subcommittee for D&I. We had a hearing that dealt with disabilities. But now let me go to the question that I want to propose to you. According to a recent report from April 2021 to April 2022 of this year, you reported that over 1.1 million complaints and 73% of those complaints pertain to credit reporting. Do you have any idea if that's because people didn't know what their credit reports or how to get it on this credit reporting? Do you have any idea of that? And let me just say before you answer, I'm asking that question because many of my colleagues have pieces of legislation that deals with credit reporting and credit scores. For example, I have the Free Credit Scores and Consumer Act that aims to reform the credit reporting system. Can you talk to us about any information you could share on credit reporting?
Well, I appreciate the question, and I think one of the things that's very important for this committee to know is that it's not just the three major credit reporting conglomerates. We now have more big tech firms, data brokers, and others that are developing scores and background dossiers on all of us. And I think this raises some real questions about what are we going to do to protect privacy, data sharing, and also all of the decisions that are being made about us in these dossiers. And I think we have to work together on this. We will continue to use our Fair Credit Reporting Act authorities as we do in background screening. We see a whole ecosystem of this, but I'm worried that we're shifting to a more social scoring environment that really you only see in places like China and other similar jurisdictions. So I think we want to avoid that kind of backdoor, backroom data collection on all of us and really understand what are the big tech firms doing and these data brokers with our data. Accuracy and disputes is a core issue. When people have background reports, they're sometimes falsely matched to a criminal record or falsely accused of something. This is something that's a big priority.
I'm gonna stop you only because of the clock running and ask you yes or no. So I assume this means you'll work with us in legislation to help you in this area.
Of course, I think credit reporting is a key place and background reporting for us all to work together on both sides of the aisle.
Well, let me just say thank you for that. And in my last 20 seconds, if this is our last hearing of the year, I want to dedicate it to saying thank you to our chairwoman. I could not have been more honored to serve on the Financial Services Committee under her and for the appointment of the D&I subcommittee. I want America to know that we are all the better because of Congresswoman Maxine Waters fighting and standing up for the people. Thank you, and I yield back.
Thank you so very much. The gentleman from Texas, Mr. Williams, is now recognized for 5 minutes.
Thank you, Madam Chair and Director. I regularly speak with community bankers from Texas. That's where I'm from. And in all the meetings I have, every single person tells me how terrified they are about your agency's 1071 small business data collection rulemaking. They're concerned that complicated reporting requirements will tie up loan officers and maybe create more compliance officers and increase the cost of credit. They're concerned that this will push the industry towards a standardized small business loan product and kill relationship banking, which is community banks. And they're concerned this will force their employees to consider factors outside of creditworthiness as they evaluate small business loan applications. So you don't have to take my word for it. It's really interesting. The Biden SBA Office of Advocacy raised similar questions on how harmful 1071 will be. They submitted a letter earlier this year on the rulemaking that stated, "We are concerned that the CFPB's approach may be unnecessarily burdensome to small entities, may impact the cost of credit for small businesses, and may lead to a decrease in lending to small, minority, and women-owned businesses." That's from the Biden SBA. So Director Chopra, describe how you have been working to accommodate the concerns of small business within rulemaking. It's 75% of the businesses and over half the workforce you're talking
Yeah,
to.
no, I think you raise a point about how to make sure that we implement the congressional requirement in ways that we can simplify as much as possible in terms of systems. We know, and I'm actually very worried that a lot of businesses may have to bank with the very largest rather than a local bank. And local banks, as we saw during PPP, were much more responsive and agile. So what we do, I've met with dozens of state associations of credit unions and bankers. We have heard from them. We're obviously taking very seriously what we hear in all the comments. Yeah. But it's a tough one. We have to implement this in accordance with what the law and the court says. I think over time, we want to make sure that we have an implementation period that gives the smaller firms more time and the ability to make sure that it's not duplicative with existing requirements under the Community Reinvestment Act. So we're going to get it done by March, but I hear your concerns loud and clear. We're going to do the best we can, but of course the statute is what we have to look to.
Your regulations trickle down. You can save Main Street America. Cut these regulations. Now, the first time you came before this committee, you said you would protect the interests of small business. However, since you joined the CFPB, I cannot find one example where you've listened to the private sector and changed your course of action. I hope I'm proven wrong on how this 1071 rulemaking will play out, and you're saying you understand what it does to the community banks and small businesses, and I hope I'm proven wrong on that, but I'm also very skeptical that you will change the ways you do it. If you continue to disregard the concerns of Main Street America, half the payroll, half the workforce, it will lead to the demise of countless small businesses, leaving many communities without a vital source of economic growth and stability. So to that end, the CFPB recently issued a request for comment on data for auto lending. When the CFPB was created, auto dealers were specifically exempt from your agency's purview. I can tell you the supply chain crisis, coupled with increased interest rates, are hammering car dealers right now, and it's hurting consumers. And the threat of increased regulation from your agency is not needed at this time. So, Director, the CFPB does not have the authority over auto dealers, correct?
That is correct. We cannot exercise any enforcement or supervisory jurisdiction.
Okay, so what information are you looking to collect from them?
So I don't think we've proposed any information collection on them. I think what we have the cost of the outstanding auto debt is now, I believe, $1.5 trillion. And as you mentioned, the cost of vehicles has meant more people have had to borrow.
Yeah, couple that with higher interest rates.
Of course. And I think the challenges are that there is a very disparate set of data about what's happening in auto lending. And so we had a meeting with industry groups where we talked about what would be most useful to investors, to analysts, to banks, because many banks and credit unions are actually, they want to get into auto lending. So figuring out what is the public data that they can look at in order to entice their entry. But we, just so you know, there is no proposal to, collect from auto dealers.
Okay. All right. Madam Chair, I yield my time back.
Thank you. The gentleman from California, Mr. Vargas, is now recognized for 5 minutes.
Thank you very much, Madam Chair. First of all, as Ms. Beatty stated, I want to thank you. It has been an honor to work with you. You really have been a champion, especially for affordable housing, consumers. I do keep thinking of what we could have done if we had that $150 billion for housing in the United States and how hard you fought for that. And again, it's been an honor to serve with you. It really has been. Real pleasure. Now, I want to thank you, Director, for being here. I do want to quote you here. You said, "We need an orderly, strong, independent Consumer Protection Bureau." You said that today, and I think we have a very strong, independent consumer protector in you. So again, I'm very pleased, and you were proving that today. They were throwing a bunch of crap at you oftentimes here, and you defended yourself and your agency quite well, so I appreciate that. Even obvious stuff, like, of course, it's at the court. The court will decide. This is the Supreme Court, and I think you defended yourself well, something that was obvious. One of the things, though, I did find kind of odd today is the issue of guidance versus enforcement. Now, before I came to Congress, I was a vice president of a Fortune 500 company in their corporate legal department. We had lots of lawyers. We had outside counsel. So whenever an issue came up, of course, we were lawyering all over the place. Small companies don't have that. And that's why I think it's a good idea to give them guidance. I don't understand the issue on the other side, why they're so upset about it. Could you illuminate us or me on that?
So you're so right about the small players. And when I talk to investors and especially new entrants, when they're raising capital, they don't have money to burn on all of these DC lawyers. So they ideally like to have an in-house counsel and some outside law firms that are often general, and to be able to find the right types of applicable guidance. And it's ideal when it's in plain language. And we do our best to be able to publish that so that people can know what the expectations are. I think it actually reduces barriers to entry. Now, in some cases, people might not like the law, but Congress sets laws, and there are rules that implement them. So I do think this is actually pro-competitive to create more clarity.
I agree with you with the exception of one thing. Don't beat up too much on those DC lawyers. They're all my classmates.
Sorry.
And the last thing I would say also, it was very interesting being at that company, because one of the things that we attempted to do as a large company is not only follow the law, but also be a good citizen. I mean, we did try to promote women, people of color. I think we did a pretty good job of that. The large companies aren't always the bad people. In fact, oftentimes they're not at all, because they want to be a good citizen and they want to, grow even larger. And the way to do that is to follow the law and be a good corporate citizen. So anyway, I know everybody likes to beat up on these big, giant corporations. I was with one of them, and I thought it was a good corporation. I still do. I do want to talk a little bit today about cryptocurrency. Now, you said it's just payments, but people are getting ripped off. And I, as I stated yesterday, I don't get the point. I mean, I really don't get the point of of this whole system. Just to be honest with you, I think it's going to be a little bit like the tulip mania in the Dutch. It's going to collapse at some point, and there's going to be no value there. But that being said, people are losing money. What can you do to help here?
Well, so most of the activity right now in digital assets is really on speculative trading. Of course, that has come to a tumble. So I think, of course, the markets regulators are really the ones that do trading and exchanges. That being said, we have done recently an enforcement action against Loan Doctor, which was essentially baiting people into a high-yield savings account. They were making all sorts of misrepresentations, and on the side, were investing in very speculative things, including crypto. That's an example of where crypto intersects with consumer financial products when you're advertising like a savings account that's not really a trading account in the same way that others are. So we try and make sure that where the law implicates our authorities, we're looking at that. And I think the biggest concern I would have is making sure that the regulators are ready if some of these digital currencies, like a stable coin, really scale, like on a big tech platform or a card network, and really working with the other regulators and all of you to make sure there's not runs and that people can get their money when they need it.
My time's almost ended here. I want to thank you. I think you're doing an excellent job. I wish you the best on your case before the court. Thank you. I yield back.
Thank you. The gentleman from Michigan, Mr. Huizinga, is now recognized for 5 minutes.
Thank you, Madam Chair. One comment. In constant dollars, cars and trucks costs have increased dramatically. And you have to ask why, right? It's a combination of a number of things: government mandates, customer expectations, and manufacturing costs. Coming from Michigan, I represent all of the Tier 1, Tier 2, Tier 3 automotive suppliers. And no wonder people are borrowing more. So mystery solved on that one. Real quick, though, I do want to kind of returning to crypto. I saw that the Bureau released a bulletin in November analyzing the rise in crypto asset complaints. Do you anticipate expanding your enforcement in this area?
So I think
Quickly.
the existing place in crypto is that it's really, again, mostly used for speculative trading.
I understand
not
what it
used
does.
for profit.
Are you planning on increasing
No,
your
and
enforcement?
by the way,
No.
just to
Okay.
be clear on this.
I will accept no.
No, well, I think it's important. Crypto is not a product. It's
Okay,
a
let me,
technology.
hold on,
So
just a
if it's
second.
used for a savings,
I understand what it does. We just had a whole hearing on it about this. My next question on that is, have you received any criminal complaints or enforcement actions, or have you been involved in any of those regarding FTX or Sam Bankman-Fried? Or his parents?
we are
or
not a
anybody else?
criminal enforcer.
No, I understand that. Have you received any of the complaints, and are you involved in any of those complaints or any of the enforcement? Has anybody pulled you in?
No. So
Okay,
we're,
stop, right there, good.
No, but
All right, that's all I need to know.
No, but just the word complaints. You said there's consumer.
Okay,
complaints.
reclaiming my time. All right. Director Chopra, in your testimony, you said the CFPB is working to ensure that buy now, pay later lenders adhere to the same protocols and protections as other similar financial products. And it looks like you released a study in September on buy now, pay later, correct?
That's correct.
Okay. And you're planning on releasing what the report calls, quote, interpretive guidance, is that correct?
We're looking at various things and working with industry to.
You
figure
are
out
planning on it or you're not?
We are considering it. We don't have any final plans yet. The
Okay,
process
good.
takes time.
Stop right there. By the way, I will note, this is why we get frustrated, because you just burn time. You'd be great in the Senate.
I'm
Okay,
trying
moving
my
on.
best to answer
As an interpretive rule exempt from the notice and comment rulemaking requirement of the Administrative Procedures Act, is it your intent to avoid a lengthy rulemaking process?
No, I think you
Okay,
have a new
great.
product that.
So here's what I'm getting at. The Bureau seems to follow a pattern, however, to not release a rule, but to issue opinion letters, release blog posts, take enforcement actions as an alternative to the rulemaking process. And this strikes me, frankly, as strange, given your most recent budget request, which goes by quarter to increase your budget, which, what are you going to use it for? I mean, it would make some sense. You could make the argument you're going into rulemaking or enforcement, you need that rulemaking. So, quickly, why do you need additional dollars?
Well, we can provide you with more information. There is some seasonality to our expenditures by quarter. We're happy to look at that
Okay.
data. I don't think.
Great.
Go ahead.
Appreciate that. And I'd like to yield the rest of my time to my friend from Kentucky.
Go for it.
Director Chopra, revisiting the March UDAP exam manual revision, one analysis says that your action vastly expands the reach of its anti-discrimination enforcement beyond the limits of ECOA. Do you agree?
No.
Okay, and why then, if you disagree with that analysis, why then did you say that you are breaking new ground?
Well, I think in the way we are telling and articulating what the FDIC, the OTS, and others have already said, with some more specificity about what will our examiners look at when there are complaints.
Okay,
for
so let
example,
me
of religious
reclaim my time.
discrimination
Where
and
did
others.
Congress authorize you to expand UDAP authority to anti-discrimination? Where and when did we do that?
The law prohibits unfair practices. Some discriminatory practices may also
Director,
fit the legal definition.
Director,
It's common when
reclaiming my
there's
time,
wrongdoing.
reclaiming my time. You were at the FTC, you know history. When Congress gave unfairness authority to the Federal Trade Commission in 1938, it did not intend to give the FTC authority on discrimination. That's why, in 1974, Congress passed ECOA, which created the anti-discrimination laws. Congress in Dodd-Frank gave the CFPB the same unfairness authority that it gave the FTC in 1938.
No, that's not correct.
That is correct.
No, it is
That
not.
is correct.
In 1994.
My time has expired, Madam Chair.
That is correct. I want to talk to you offline about this
That's
because,
fine, but that's not
because
correct.
you're
Gentleman's
smart
time has
and you know
expired.
better.
No.
You know better.
Mr. Barr,
Yield
The
back.
unfairness
The gentleman's
standard was
time.
promulgated in
the
1994.
gentleman has yielded back. All right.
No,
The
I'm happy to
gentlewoman
talk to
from
you,
New York,
Congressman.
Mrs. Maloney,
It's
is also
1994.
the chair of the House Committee on Oversight and Reform, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Mr. Chopra, for your public service. And in 2009, this committee passed a bipartisan bill called the Credit Card Bill of Rights, which the CFPB said saved consumers roughly $16 billion, as in B, a year. Under the former president, they stopped keeping records, I was told, on the savings that it was making for people. I think it's important that when we pass important consumer protection bills, that we continue to track that. What was interesting about your research, it showed that it did not in any way hinder banks. If anything, they got stronger, possibly because people trusted them more, the abusive practices had stopped, more people were using them. So it helped the financial industry get stronger, certainly helped the consumer keep $16 billion in its pocket. My question is, are you still keeping records on the effectiveness of the CARD Act, the Credit Card Bill of Rights?
So we are gearing up right now to conduct our statutory required CARD Act report, and I've taken your feedback about what type of metrics we should be putting in it, and I'm going to do my best to respond to what you're saying in the way that it was previously done. It's so important to have a competitive credit card market. We've been working with community banks and credit unions on how they can also enter the credit card market to provide more options. It's the core way in which small dollar lending happens in our country.
And you issued a report earlier, or your body did, on the Overdraft Protection Act. And I believe the report showed that it was roughly $15 billion was taken from consumers with unfair, deceptive practices. Is that correct?
I think we released an analysis of the total amount of deposit charges based on the sample of accounts, and I believe you're right, it was $15 billion, but that's really just the total charges. We've started to see a number of banks across the board compete more. Many are lowering their overdraft fees, some are even eliminating them. So we have continued to look at the institutions that are most dependent on these. In some cases, we've found pretty significant non-compliance with existing rules. There's no question that we want to make sure that when there is any overdraft or other charges, that it meets the requirements of the law, and hopefully we'll see banks and others continue to compete on making their charges more competitive.
Well, that's true that a lot of banks have on their own started initiating, really eliminating overdraft fees. But it would be less confusing to consumers if we had one standard. Wouldn't you agree? A standard across the board for protection from unfair, deceptive overdraft fees?
So we're continuing to supervise institutions, work with other regulators on the question of deposit charges. So we'll continue to, work on that. I'm really, though, encouraged to see where the market has moved. I think where the competition we're seeing is going to increase, or decrease billions of dollars and still give people access to their funds, and that's very positive.
Well, we passed a bill out of the subcommittee, or the committee and subcommittee on overdraft protection. Could you review that and let us know what your feelings are on that particular bill? And it would be less confusing to consumers if we at least had a floor of protections for them.
And I'd be remiss if I didn't say overdraft and credit cards are really linked in many ways. We want people to be able to get the lowest cost way of accessing credit. And in many cases, a credit card in a competitive market would be much cheaper, especially given post-CARD Act, than the protections it affords.
Well, thank you for your testimony, and I yield back.
The gentleman from Arkansas, Mr. Hill, is now recognized for 5 minutes.
Thank you, Madam Chair, for the hearing. Director, thanks for being with us today. I echo my concerns Mr. Williams expressed about 1071. And think about it this way. This is a chance for you to actually turn a page. I know what Dodd-Frank said, but under President Obama and President Trump, it was just deemed, as Charlie Munger is frequent to say, it was put in the too hard pile. I really think 1071, while well-intended, is not implementable in a cost-effective way, and I don't believe the public policy, theoretical benefits of that data will actually produce results. I think it will reduce in fewer participants for small business lending, higher prices, and just the opposite of what well-intentions are. So you don't need to comment on it. I just want to echo, I agree with Roger Williams, and I think you could be the director that just brings an end to it by saying after 12 years of debate, thought, lots of hearings, consideration by my staff, it's unworkable. And I recommend blank, something, completely different, and just take a pass on implementing. All the laws we pass, sometimes we don't get them right, and we're not robots here, and we don't expect you to be one. Well, you passed it, I want to do it. All your predecessors have struggled and failed in that capacity. So let me change subjects.
Sir, I do want to just say, though, for the record, we are under a court order to complete it now. So the Bureau was sued under my predecessor.
Yeah, fair point.
And I'm happy to talk about it with you further.
We should, and I mean, maybe there's you're not a lawyer and I'm not a lawyer, but maybe we can, think about a response there. I hear the point. Let me shift gears to 1033, this open data rulemaking. You released that in October. It's an outline of proposals and alternatives in the consideration of rulemaking on personal financial data rights as required to implement Section 1033 of Dodd-Frank. And I thought it was really notable that the Bureau's proposal would cover only depository accounts and credit cards from regulated depository institutions, but would not apply the rule to services provided by non-banks. And the CFPB itself acknowledges that many non-bank data providers offer numerous consumer financial products and services like mortgages and auto loans, and yet they wouldn't be subject to this proposal. So why is the scope of 1033 rulemaking narrow to just depository institutions and credit card accounts?
So I want to make sure I get the statutory provisions on this right, but just on the question of the proposal is really all transaction and deposit accounts. And we're starting there. We're going to keep going and go into more products. The reason why we're going first here is really based on what we're hearing from industry about where is the most valuable data to get in order to be able to underwrite or help people access new products. And they say it's the transaction data.
Okay.
I'm sorry, the ledger data.
No, let me ask you to pause there and say that you're going to pursue non-banks in a second tranche. You don't really address liability for data breaches or other data security non-compliance that happens once a consumer's data leaves the financial institution or other covered entity. Is it the Bureau's assumption that banks have the liability for data breaches or other security risk for data that they have no control over, while non-banks and other data users have no oversight?
No, that's not at all where we're trying to go. And in fact, this is a place where we might need some of your help. We really want to make sure that if there is more data and very sensitive financial data moving around about people, it is safe and secure from end to end. So I think we're looking about how to build in the appropriate data safeguards. And by the way, I think a lot of those non-banks don't necessarily have the same supervision for data security, and we need to make sure they don't create an underworld of data resharing.
Well, I agree with that. This committee's had many hearings on data protection, data privacy, and I hope we can have a bipartisan data privacy bill in the new Congress.
And as I shared in my testimony, I think that's the place where we really need to do something.
Yeah.
Financial data is very sensitive.
I'm going to send you some additional questions on that if you'd follow for the record. I was looking at your statute. It says the Board of Governors shall transfer to the Bureau from the combined earnings of the Federal Reserve System the amount determined by the Director to be reasonable and necessary. It says the combined earnings. The Federal Reserve has no earnings. So a plain reading of the text means that Congress should act to put the CFPB on appropriations, in my view.
the Fed's earnings are negative. In fact, they'll cost the Treasury $100 billion this fiscal year. Do you support the Bureau being on appropriations as opposed to being dependent on something unreliable like Fed earnings?
Well, I need to look closer at that language, but the views of the United States and the executive branch are really in that petition that the Supreme Court has received. We're happy to share that with you. It's a matter of public record, and it articulates the full legal views.
Thank you. The gentleman from Illinois, Mr. Caston, who is also the Vice Chair of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, is now recognized for 5 minutes.
Thank you, Madam Chair. Pleasure to see you again, Director Chopra. I'm sitting here listening to some of the comments, and I'm reminded about 10 years ago when I was running an energy company and doing a debt raise on Wall Street. I'd done the sort of rehearsal with the investment banker we retained, and she cut me off and she said, the definition of an ugly American is someone who travels to Europe, meets someone who only speaks French and yells at them in English. And she said, when you're talking to a banker, don't yell at them in engineer. And I share that story because I am grateful and I encourage you to continue speaking to consumers in consumer and not just yelling at them in regulatory law, notwithstanding what some of my colleagues seem to prefer. Moving on from that. When we talked last April, I'd asked you about creditors and social media companies, specifically Facebook, and how their algorithms may violate fair lending laws. I was very pleased to see since that conversation in May that you released a statement of policy confirming that federal anti-discrimination law would require companies to explain to applicants the specific reasons for denying an application for credit. I'm curious just generally, I realize it's only been a few months, since that guidance was issued, have you witnessed any changes in financial institutions who are using black box algorithms to make lending decisions?
Yeah, so what we're seeing, and it's informal right now, is that entities that use advanced computational methods, algorithms, and others, they're actually working to make sure that they can explain clearly why someone got an adverse action, because that's what congressional law requires.
Mm-hmm.
And so I think we're still trying to see where there might be additional questions about the adverse action notice. We're doing our best. But ultimately, I think you've seen a number of developments, the AI Bill of Rights, other things happening internationally that really are putting a premium on explainability, because often these algorithms can just completely shut out a group of users.
No doubt, and it has to be auditable somehow.
That's right.
So I'm glad to hear that on the bank side. When we talked last April, it also asked this question, said, what if the bank is not using the algorithm, but the ad for their credit card is being promoted through a Facebook algorithm or something like that? And when I asked you if CFPB had the authority to look inside those black box algorithms, if they're not held by the banks, I think you said you weren't really sure.
Yeah, so we've looked into this further, in as much that they're providing, if they're a service provider, material services like offering products, it would be subject to our authority. And we know that many banks and other financial firms are really taking a hard look about how they use some of these third parties to do targeting and algorithmic targeting.
Well, but I guess what I'm still trying to understand, if I'm a credit card issuer, I put an ad on a Facebook site. That ad, unbeknownst to me and not disclosed by the algorithm, is preferentially targeting, rich white people because they're most likely to get. I'm making up the example. Do you have the authority right now to query that algorithm? Well, yeah, the Facebook in that example.
Yes.
Okay.
If it's providing a material service to the financial firm.
And have you exercised that authority?
I'm not going to comment on where we're investigating or supervising on that, but certainly our authority would cover those service providers. You can't outsource your liability on that, and in some cases, the service provider is of greater interest to us, especially those serving a lot of firms.
Okay, well, let me maybe reframe the question then, recognizing that you can't comment on the specifics. I've introduced a bill with Congresswoman Trahan and Congressman Schiff, specifically to give the FTC the authority to query, and we've done it that way because there was some concern with some of the social media companies that algorithm is a trade secret that they don't want in the broader public. If we were to do that, without asking you to comment on the specific legislation, is there information that you would like to get about that black box that you are limited because of trade secrets that would be helpful to have some agency, FTC or otherwise, with the authority to ask those hard questions about how the algorithms work?
It's a great question. I do think, trade secrets, we seek to protect, and all agencies seek to protect confidential information, but you do worry when that is cloaking necessary information to ascertain compliance. So I don't have any immediate worries, but it is true that sometimes firms will not provide information, and sometimes we need to go to court. Agencies may need to go to court to get it.
Okay, well, obviously, share your goal to make sure that we do not discriminate in our lending practices, and if we can work together to close that barn door, look forward to continued conversations. Thank you. I yield back.
Thank you. The gentleman from South Carolina, Mr. Norman, is now recognized for 5 minutes.
Thank you, Chairman. Director Chopra, do you would agree that small medical providers in underserved areas deserve to be paid for their medical care, don't you?
Of course. I think small medical providers, and especially rural areas, many of them, it's hard to stay afloat and they need to get paid.
Then why are medical debt and student loan debt different from all other types of debt? And is it the governor's role to be rewriting contract law? And to be honest with you, the biggest complaint I get with your agency is a frustration with you rewriting rules, kind of being a one-man marching crew out, forgetting Congress, but would you agree you're rewriting the contract law?
No, I actually don't even understand can you say more about contract law? Because where we have focused on medical debt is really credit reporting. What we see in our complaints is huge inaccuracies of medical debt. We see places where there is not documentation when third-party collectors are collecting on it, and often there's a lot of paperwork between the insurance company and the provider. I really want to make sure that medical providers can get paid, but that debt collectors are not using the credit report and putting inaccurate information on it in ways when a person might have already paid it.
Then let me ask you this. What's changed that would allow the CFPB to pick certain types of debt, such as medical debt, rental debt, student loan debt, to not be accurately reported? Or I guess your interpretation of that.
No, accuracy is the standard that is put forth in the Fair Credit Reporting Act. So when you are putting any information on any background screening or credit report, there's obligations to make sure that it's correct. We don't want data brokers and credit reports to be a tool of extortion. We want it to make sure that people are getting the right, accurate information about their performance or non-performance. And you really worry when there's lots of inaccuracies, and we see it all the time.
All right, per the Bureau's website, and notice in the Federal Register in November of 22, your office is collecting information about the auto lending market. The Bureau also held a non-public meeting for stakeholders on the issue, yet not all the relevant stakeholders were invited. Can you explain what criteria your Bureau is using to decide who is a stakeholder and who is not?
Well, we have many meetings. I'm sure there will be more. We meet with industry groups a lot. Most of the participants were industry groups. We talked about what auto lending data is currently being used in the marketplace. Unlike mortgages, there is less availability of public data. We're looking at how small banks and credit unions can have public data access so they know.
Let me ask you, my time is running out.
Of course,
are independent automobile dealers involved in meetings when it comes to car repos?
Are they involved with car repos?
Do you involve independent dealers when you meet with other
well, I have met with a number of dealer associations. While we don't have any legal authority to bring enforcement or supervision, I certainly talk to them. I've spoken at their conferences because there are issues in the broader auto market that they will want to be interested in. One of the things they tell us is that often when they're involved in the process of credit reporting or others, it's good for us to always be in touch with a broad array, not just banks and credit
So
unions.
you believe in transparent communication?
We try our best to meet with these industry groups. We don't actually always meet in public. It's normal actually for them to come and speak
Okay,
to us. But
according
we'll
to
try
my-
our best.
According to my background, in the first 10 months that you've been in office, you met with the industry 28 times. Your predecessors, Mr. Cordray and Mick Mulvaney, met with financial services industry over 100 times collectively.
Well, we have met with more small banks and small credit unions than both of our
Define met.
predecessors.
How have you met with them?
So what we've done is we've had a series of town halls or group discussions organized with
So
their
the
state
28
bank-
times is not accurate.
Well, that's not 28 banks. I don't know what number you're referring to. All I can say is that our industry outreach to small financial institutions far exceeds our predecessors. And
That's
we
that's not according
Okay, well,
to what we get.
I'm happy to share more data.
Thank you. The gentlewoman from North Carolina, Ms. Adams, is now recognized for 5 minutes.
Thank you, Chairwoman Waters, for holding the hearing today, and thank you, Director Chopra, for being with us today. Like I said, when you testified before us in October, it's nice to have you behind the wheel of the CFPD. The work that you're doing is critical, from protecting our consumers to making sure that our financial regulators mirror the diversity of our nation. So thank you for your efforts. I am extremely concerned with the levels of student debt in this country, which amounts to $1.8 trillion. And so I believe we need to cancel $50,000 in student debt for federal student loan borrowers. And I was proud to join my colleague here on financial services, Nikema Williams, along with Representative Deborah Ross and Haley Stevens, in introducing our Clean Slate legislative series to make real steps and to take real steps toward helping students. But in particular, I agree with you that we need a concrete plan on student loan debt relief before payments restart in September. So my question to you is, can you discuss why it's so critical for us to have a plan in place for student loan debt forgiveness, one way or another, for our students, the servicers of that debt, and our economy?
Well, thank you for the question. The CFPB, our role is oversight of the financial firms who are engaging in practices implicated by the laws that we administer. The Education Department and the Biden administration, they are going through a process which is subject to appeal on student debt cancellation. We are looking to make sure that when payments restart, whenever that happens, that people are ready, that everyone is ready. We don't want a messy return. And so we're really hoping, and we're trying our best and working very productively with the industry and others to make sure that people, when the payments restart, if and when, that they know what their options are if they can't pay. We've done some analysis to suggest that where are borrowers with student loans struggling now? We've released a report on that. So we know that some of the economic uncertainty is out there, and what we don't want to see is a huge spike of defaults. We want to see servicers work with borrowers so they know their options if they can't make the full payment and can get into a repayment plan that gets them on the road to paying off that debt.
Well, thank you, sir. The OMWI at CFPB released a report a year ago examining diversity and inclusion across your regulated entities, including both depository and non-depository institutions. So why is it important for these institutions to share this data publicly? And is there a link to sharing this data and having a diverse workforce that improves consumer protection or service?
So it's a great question. I think, I believe it's Section 342 that establishes the OMWI programs. We take what is in that statute very seriously. I know the Chairwoman has been very active on this, and Congresswoman Beatty. We've published a set of reports and also want to make sure that we are fulfilling all those obligations. I didn't catch specifically, Congresswoman, the specific question on consumer protection, but I just wanted to convey we are actively fulfilling those mandates.
Thank you, sir. So are you aware of any specific impacts on the credit reports and scores of the consumers who utilize the company's debt relief services?
Yeah, I think over the course of many years, both of my predecessors have also done work on debt relief. And sometimes there's phantom debt relief, sometimes there's outright fraud, sometimes things are put on the credit report that are outright false in order to induce people to pay. That has been the subject of a lot of law enforcement, and often what's a real frustration is that even when you catch these guys, they often don't have the money or it's too late. So one of the things we've recently proposed is a registry of non-bank firms that have, have one of these law enforcement orders under them. Debt relief providers is a big space where this occurs. It will also help states see if another state put in an order against one of these bad actors and they're coming into their state, it might help them respond more quickly. So we're working through that process now.
Great. Well, thank you. I hope that they can expect to see their checks in the mail soon. Thank you very much. And Madam Chair, I yield back.
Thank you. The gentleman from Ohio, Mr. Davidson, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. And Director Chopra, thank you. And clearly you have differences of opinion with the Republicans, and you and I would have many differences of opinion. I think a lot of those have been aired by my colleagues. But I think it's important where we can find common ground, we ought to appreciate it. And so I've been encouraged by some of your comments respecting privacy and the importance of protecting that for consumers. And frankly, kind of the distinction that you've recognized in terms of how a lot of tech firms are monetizing that data. And really, in a way, it's kind of an arbitrage where they're taking value that for any one consumer isn't necessarily worth a lot. They're kind of giving it away for free access. But it's minted quite a few billionaires. It's created some real asymmetries, and I think our laws are long overdue as to address that adequately with a comprehensive privacy law. So that's where I've been particularly appreciative of the Section 1033 rulemaking that you've undertaken. So, you said that the CFPB will publish a report in the first quarter next year and subsequently propose a rule later in 2023. You finished by saying that the rule will be finalized in 2024, and you also mentioned that during this process you will convene panels comprised from smaller entities to seek feedback. How are you deciding who gets to participate in those panels, and could you talk a little bit about the process to getting to a final rule?
Sure. So the Small Business Administration is very involved. They actually they're going to produce the report with us about what small entities are saying. We've tried to hit the broad set of stakeholders from, for example, fintech companies to small banks and credit unions. We've worked through their industry associations, and many of them have put forward people. We're doing our best to make sure it's very inclusive. And then in terms of finalizing a rule, the goal would be to make sure we figure out how to protect data while also giving more competition and innovation for new players. I would love to see a market where there's competition on more privacy protection too, because we don't want just a few entities engaging in surveillance and doing what they want with it.
Yeah, I'd like to see a big shift in the surveillance capitalism, and appreciate the perspective that you bring to that. Obviously, I'm rooting for a major law from my colleagues. In fact, I hope Republicans make H.R. 4, since the Fourth Amendment is there, a major privacy bill that recognizes a property right in our data that is individual. And in that sense, then the individual can consent. There'd be a whole different architecture. I'm not sure if we get all the way there with the rulemaking, but I look forward to collaborating with you to get as close to that as we can within the bounds of current law. You mentioned fintech firms, and we've had some feedback that just looking at your calendar, you don't meet directly with a lot of fintech firms or a lot of specific players. I guess my question is, what are the primary sources of information as you go about your job and you go about overseeing this rulemaking? How do you get input on the state of fintech, the state of innovation, the practices that are really abusive versus the practices that are actually innovative and protective of privacy.
So one of the things we make it a point to go to a lot of fintechs. They don't have Washington D.C. staff, so we try and go to the industry associations that represent a lot of them, especially in payments. We attended and brought a delegation of CFPB employees to the main fintech conference. I spoke there. We met with a wide range of people. I'll take the feedback, though, that if you have input too, we want to continue to find ways to get new players in the business. It's one of the reasons we also talk to investors, to analysts, because they often are the ones deploying capital that help firms get off the ground. But we always welcome input on how we can reach more of those new firms.
Yeah, thank you. And obviously the state of tech makes all kinds of things possible, but from your perspective, thinking about the consumer, why do you think there's so much demand for all this fintech in the market?
Well, I think it's great. We are really tech forward. We have set up a chief technology office. We have changed our innovation approach from, instead of picking one fintech as a winner take all, we're trying to find out what can we issue so that all the fintechs or all the banks involved can benefit and they can compete against each other.
But aside from the firms, if you think about the individual consumer, what is it that all this innovation is driving at? I mean, it seems like there's a void in the marketplace that they're trying to address, and I wonder how you could.
Well, I think part of it is, as we've gotten out of the pandemic, people want more digital services. They're demanding it, and we want to see it being fulfilled. And I think, Congressman Davidson, I think that's why we want a lot of decentralization, small players. We don't just want a handful of the big tech firms dominating it. That's not a good market structure.
Thank you, and my time's expired. I yield.
Thank you. The gentleman from Illinois, Mr. Foster, who is also the chair of the Task Force on Artificial Intelligence, is now recognized for 5 minutes.
Thank you, Madam Chair, and to our witness. Director Chopra, I'm very impressed by the observation that out of the wide purview of issues under the CFPB's mandate, that over 70% of all consumer complaints filed with the CFPB relate to credit reporting. On October 2nd of this year, the Wall Street Journal reported that Equifax provided incorrect credit scores for potentially millions of customers applying for credit, including home credit cards and auto loans. 2 days later, a class action lawsuit was filed against Equifax, led by attorneys representing Nydia Jenkins from Florida, who alleged that Equifax's error landed Ms. Jenkins with a substantially pricier car loan. According to the suit, Ms. Jenkins was pre-approved for a car loan in January, but denied in early April because her reported credit score from Equifax was off by 130 points. And because this loan was denied, Ms. Jenkins was allegedly forced to buy a car from a different dealership at a much higher interest rate and now pays about $2,300 more per year than she would otherwise have had she been correctly qualified for the initial loan. So first, in your view, were Equifax's actions in violation of the Fair Credit Reporting Act?
I can't comment on that matter. We don't comment in public on any of these specific company matters. I will say, of course, the 3 credit reporting conglomerates have a lot of impact on all Americans and their ability to get credit. When you have an error,
I understand. I understand you can't. Yeah, that you can't comment directly on that. But we often hear back from the credit reporting agencies that although some credit scores and reports may get reported inaccurately, that they virtually never adversely affect a consumer before they're corrected. However, in the case of Ms. Jenkins, this certainly seems to have affected her adversely. So do you agree in general that with the credit agencies that almost all of credit errors are benign?
All credit reporting
are benign, that
No, I don't.
Okay.
I think they can be very severe. We've seen situations where background reports and credit reports have actually blocked people from getting an apartment or a job because they're falsely matched with someone else. We've seen how it leads to much higher cost of credit where there's a material error, and the list goes on and on.
Yeah, and according to a CFPB advisory opinion that was published in October of this year, the FCRA was enacted to protect consumers from the transmission of inaccurate information about them. The opinion further explained that while consumer reporting agencies like Equifax are preparing consumer reports, they are held to certain legal standards, including a requirement to, quote, follow reasonable procedures to assure maximum possible accuracy of the information concerning the individual about whom the report relates, unquote. So do you believe that Equifax and the reporting agencies in general have appropriate procedures and controls in place to ensure the maximum possible accuracy? And what is the standard to prevent instances like Ms. Jenkins apparently suffering
Again,
through?
I need to be careful. The law is, it's very clear in the statute, reasonable procedures to assure maximum possible accuracy. I can commit to you that where we find that, we will, in our supervision and our examination and enforcement, take that very seriously. I've been part of a number of enforcement actions involving tenant screening where that provision has not been followed. And look, it is a huge issue. Consumers are not the customer of these companies. They're the product. And so much about their life can be dictated by what is in those reports, and we need to use accuracy as our lodestar.
Yeah, do you believe we've set the correct balance in regulatory actions to make sure that we minimize consumers suffering from bad credit scoring?
Of course, I think this is a classic example of a market failure where the consumer reporting companies don't have a market mechanism for them to make sure they obtain the highest levels of accuracy, and that's why Congress has made the decision in 1970 to have the Fair Credit Reporting Act, and I would welcome working with all of you on how we continue to address the modern problems of credit reporting, especially with big tech data brokers and others.
Thank you, and my time is virtually expired, so I will yield back.
Thank you. The gentleman from Georgia, Mr. Loudermilk, is now recognized for 5 minutes.
Thank you, Madam Chair. Director Chopra, thank you for being here. I want to talk about P2P payments for a moment. We know that the CFPB has begun exploring pathways to expand its authority to address the peer-to-peer payments platforms by changing its interpretation of the Electronic Fund Transfer Act and the CFPB Regulation E to hold banks liable for payments from consumer accounts to scammers over P2P platforms. Now, coming from the IT industry and working in similar fields, I've come to know that most criminals require consumers' confidence to perpetuate most common scams, and that education and awareness are the most effective tools for preventing these crimes from happening in the first place. So my first question regarding this is, do you agree that consumer education is the most effective way to protect consumers from becoming the victims of this type of fraud and scam?
I think it's a very core and important way. I think it goes hand in hand with transparency too. But there's no question that as we've shifted to more real-time payments, peer-to-peer apps like Venmo, PayPal are now moving so much money. And we want to make sure, and a lot of banks tell us that when fraud occurs on some of these P2P apps, and they're responsible for investigating it, they can't even control necessarily what the information they're getting from those apps. So we're working to make sure that we do want more real-time payments, but what is the right role for the P2P app when it comes to making sure that consumers know what's going on and that we can protect them from errors and fraud?
Right, and I understand the difference of making whole versus the protection aspect of it. You know, education is proven time and time again the most effective way to help someone from being scammed to start with. And, you know, we know that some scammers have sophisticated knowledge of EFTA and Regulation E liability protections. I mean, if you're going to engage in this type of criminal activity, you're going to know basically how to get around this. And so if the Bureau shifts its liability so banks must refund a consumer for any P2P payment scam, isn't it true that a scammer could just assure a consumer that their bank is required to refund them no matter what? Doesn't this create an additional hazard?
Yeah, so first of all, we have not made any changes, but it is true that we are studying the role of the P2P apps and other payment players, and actually the banks are very supportive of this. I take your point very seriously that we don't want to create any situation that actually creates different fraud or may even increase fraud. So I think there's some steps that are happening on their own. You know, the banks and other financial firms, they operate the kind of routing rules, payment rules. They have made certain changes. We're looking at those changes, and I think we are cautiously optimistic about it. But you're right that we also want users, especially in a mobile device, when there's some indicia that something is off, many times you will get an alert, and we hope that UX and UI designs can also be a way that we reduce the level of fraud too.
Have you considered in your looking into this, I know you haven't made changes, but as I said in the beginning, exploring this area, have you given serious consideration to consumer education as a key element of this?
Yes, and in fact, we're trying to understand what are the customer segments that are most likely affected by it. One of the things we've identified is a rise in romance scams, which, you know, it sounds kind of clever, but it actually disproportionately is harming veterans and older Americans. So we're doing work with the Department of Defense. We're doing work with others to figure out what's the best channels to reach people so that they know how to spot a scam.
Okay.
And older Americans in particular who are suffering from any sort of cognitive impairment, we especially worry about how they might fare.
Well, I commend you on that. I think that's an important aspect of this. One final question in the remaining seconds I have is, have you considered using the almost $500 million in unspent funds of the civil penalty fund to compensate consumers?
So we are actually only using it for redress right now. So the only eligible expenditures from that fund are for consumers who are involved in an enforcement action where we've obtained a penalty. So we can't kind of hand it out in general. It has to link to a specific case that we worked on if we're giving consumers redress.
I would just say something to consider. Thank you.
Consider out in the scam and fraud area.
With P2P, yes. I yield back.
Thank you. The gentleman from New Jersey, Mr. Gottheimer, who is also the vice chair of the subcommittee on national security, international development, monetary policy, is now recognized for 5 minutes.
Thank you, Madam Chairwoman, and thank you, Director Chopra, for being here. Earlier this year, I announced my senior security strategy to ensure we're doing everything we can to end financial scams targeting our seniors. I was very proud to have two bipartisan bicameral senior protection bills passed the House this Congress, the Empowering States to Protect Seniors from Bad Actors Act and the Senior Security Act. These bills will support grants and federal coordination to protect seniors from financial scams and help crack down on fraudsters targeting the retirement savings of older Americans. Director, the CFPB stood up its Office of Financial Protection for Older Americans in 2011 to ensure the Bureau is serving senior citizens effectively. My bill, the Senior Security Act, would establish a senior investor task force at the SEC to report on topics related to senior investors. From your experience, how has the Office of Older Americans specialization on seniors helped the Bureau protect senior citizens from financial abuse? And do you think other financial regulators would benefit from having an office or panel dedicated to those issues?
Our Office of Financial Protection for Older Americans has been a huge success, and Congressman Gottheimer, thank you for your support of the CFPB and this work. You know, one of the things that we did this year, led by our Office for Older Americans, is identified a particularly pernicious issue involving nursing home debt collection. This is where someone may be in a nursing home, but then their family members are actually chased after and coerced into paying things that they may not even owe. We've also looked at the issue over the years of financial designations and certifications and how that might affect older Americans. We certainly look at it in terms of housing. We have so many seniors living often on their own in housing, and what is happening to them when they are targeted in certain neighborhoods. So again, we strongly support focusing on older American service members, students, and other special populations, we think it has given us a lot of good insight into really where we should use the Bureau's attention.
Thank you. Are there additional resources or training authorities that law enforcement and financial institutions need to increase the number of cases that are reported and resolved favorably? Is there anything you recommend?
Yes, I do think we need to work more to get some of this fraud addressed criminally. One of the things we've seen is that some of these players bounce from state to state to state, and when they're under investigation, they go someplace else. It's one of the reasons we've proposed a registry of those violators. We also think that there's more enforcement cooperation we need when it comes to swindling seniors out of their retirement savings. That's not a place that we directly have enforcement authority, but you really worry about those who have saved up but then get baited into an often very, very sophisticated scam. So looking upstream at how we see the purveyors who are trafficking that and have knowledge of that illegal activity is critical.
Thank you so much, Director. Last time you were before the committee, I don't know if you remember, I shared my concern that the CFPB's public-facing consumer complaint database could be used by firms to publish unmerited complaints about their competitors. Basically, their competitors using it as a way to stick it to them and file false complaints. And often the database, the concern is that it's not checked and there's no way to know that these complaints that are filed are actually real, and that can cause problems for competitors or for companies and particularly small businesses. What steps have you taken since we last spoke, if you don't mind me asking, to ensure that the complaints publicly displayed in the database have merit and are not misleading to consumers and protect our small businesses?
Yeah, I appreciate that. So after you spoke last time, I did look into whether we think there is an issue there. And one of the things that is important is we're limiting the set of complaints that go in the public database. And it includes often a company response, and also a company can also say, this is not my customer. So I think we can brief you more on that, but we do think it's fairly limited and reduces the likelihood of non-customers filing complaints.
If the company files and says that's not me or not my business or not our customer, is that then removed, or is the complaint removed?
I would need to look at the
protocol.
I'd need to look at the protocols exactly, but I think that may not be published if it's misdirected to the wrong company. So we can respond to you.
I'd love to follow up with you on that.
But we have not heard and seen any systemic evidence of this being an issue. But I appreciate you bringing it to our attention.
I've heard about it, so I'd love to talk to you more. Thank you so much. I yield back.
Thank you. The gentleman from West Virginia, Mr. Mooney, is now recognized for 5 minutes.
Thank you, Madam Chair. Many agencies under the Biden administration have completely lacked accountability and transparency. One of the worst offenders is the Consumer Finance Protection Bureau, CFPB, which has taken actions that raise the cost of credit while reducing access to credit with little ways for Congress to intervene. My constituents are largely rural blue-collar workers who are the most impacted by the CFPB's costly actions. So, Director Chopra, you have chosen to ignore the traditional rulemaking process, instead regulating by press release and blog post. One example is the CFPB expanding the definition of unfair in its unfair, deceptive, or abusive acts or practices section of the examination manual to include disparate impact or unintentional discrimination. This expanded definition is not found in statute. Banks and credit unions have said that this change is unworkable, opaque, and costly, and will only serve to reduce credit options for those who need it the most. In other words, hurting the very people that you're intending to help. So, Director Chopra, you have testified before that you do not recall whether anyone in the Bureau advised you to seek an administrative procedures APA rulemaking with respect to this examination manual change. Is that still your recollection?
No, it didn't. It did not. It was in a manual. It was not a rulemaking. I just want to make sure I understand the question.
Okay. Well, you know, whether anyone in the Bureau that you work for advised you to seek an Administrative Procedures Act, APA, did anyone advise you to seek
There's
rulemaking with
There's
respect to-
never been an exam manual from any regulator that goes through notice and comment. The exam manuals are guidance for our examiners so that they can consistently conduct supervisory exams. They're existing law. They don't create any new obligations. And if anything, Congressman Mooney, we're trying our best to respond to the concerns that people don't know how we will exercise authority. So we're trying to put more in public. And I get concerned when you say, oh, well, we're issuing more things on our website or our press release. We are trying to put out more information so that people know, especially people who are small businesses or consumers, so that they understand and don't have to necessarily hire a lawyer to deal with it. So I understand that there may be some places. I'm happy to talk to you further about it, but our goal is transparency.
Okay, well, let me thank you. I have a follow-up question to that. Thank you for that answer. I would say, unlike other financial regulators, the CFPB is under a sole director rather than a bipartisan board. Given the significant criticism of this change and of the organization to the examination manual from industry and consumers alike, do you believe that a bipartisan board of directors with diverse opinions would better serve consumers rather than a sole director?
Well, I would say this, for about 150 years, the Office of the Comptroller of the Currency, which has far more employees and far bigger budget and far bigger remit, has been led by a single director. I think that's part of the reason why Congress modeled it after that. And I think that's really Congress decides how it wants to create the governance of its agencies. There are many single directors. There are many multi-member boards. I think there's a lot of cons, of multi-member boards, having served as one before, but I think that's really for Congress to decide.
Okay, thank you for that answer. Last question is, would you vow today to not bring an enforcement action against any financial institution for a violation not expressly laid out in statute or in APA rule?
So again, we cannot bring enforcement actions unless we plead a violation of law or regulation. That must have specific reference to what Congress has enacted and the president has signed into law, and regulations that are codified into the Code of Federal Regulations. That is how enforcement works. We have received input from people across the board. They want us to provide guidance. Director Kraninger created the Advisory Opinion Program, which we have continued on, which is about providing guidance and helping people understand their obligations under current law.
Okay, I got a few seconds left. I just want to close by saying I've introduced legislation that would require the CFPB to undergo a comprehensive cost-benefit analysis in its rulemaking to ensure the benefits of any rule outweigh the cost. Thank you, Madam Chair.
Thank you. The gentlewoman from Massachusetts, Ms. Presley, who is also the vice chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Thank you so much, Madam Chair. And Director Chopra, it's so good to see you. Thank you for being here today, especially in this moment, at a time when consumers are being embezzled by FTX or subjected to junk fees. I'm deeply grateful for your leadership, particularly as it pertains to the issue of medical debt. The CFPB's report earlier this spring highlighted the devastating challenges that can occur when an individual incurs medical debt. I want to lift up an example of one of my constituents who I'll call Jamal for the purposes of this hearing, a young man working a full-time job like millions in our country, but still living paycheck to paycheck, has experiences a catastrophic accident, receives medical attention at a nearby hospital, and now Jamal cannot afford the bill to pay out of pocket since he lacks insurance. And so he's forced to incur thousands of dollars in medical debt. Director Chopra, let's say this medical bill ends up on Jamal's credit report. Yes or no? Is it fair that this could result in reduced access to credit
Yes.
for Jamal, in your opinion?
Yes.
And could this lead to Jamal avoiding medical care in the future even if he needs treatment? Yes or no?
Yes.
And could this medical debt make it more difficult for him to secure future employment?
Yes, we've seen how employment background checks and background reporting, it has a huge impact on people.
And if this medical bill is inaccurate, would Jamal still be penalized with a lower credit score?
If the score includes it and it's inaccurate, yes, generally speaking, it would. And it's a huge problem. It's one of the reasons the CFPB has focused a lot on medical debt, especially credit reporting, and the huge amount of inaccuracies and the impact on people's lives, like Jamal.
Yes, thank you, Director. Again, it's a systemic issue. Jamal is no anomaly. It is the reality of tens of millions of households and individuals across this country, roughly 20% of the American public. People with medical debt who are disproportionately representing marginalized communities are struggling with their health issues. But on top of that, they are further inflicted with lower credit scores, resulting in financial hardship. And that is an injustice. Director Chopra, I'm so pleased that following the CFPB's report, Equifax, TransUnion, and Experian announced they would make policy changes that would remove 70% of medical bills from credit reports. This is really welcome news, but I'm still concerned about the 30% of medical bills that won't be removed and the impact that this will have on low-income consumers in my district. In order to build on the Bureau's work thus far, what further steps is the Bureau considering to protect these vulnerable consumers, many of whom may be facing catastrophic or chronic medical issues?
Well, we are certainly considering rulemaking under the Fair Credit Reporting Act to address the issue of medical debt. I'm really worried that credit reports can be used as a tool of coercion into having people pay debt they already paid or that they really never owed in the first place. You know, I think I see this as a privacy issue too, being able to slander someone and basically say they haven't paid something that they may not have even owed. This is out of control, and I think it's a place where we continue to be seriously worried, especially for medically necessary debt.
Thank you so much. Certainly our credit score is our reputation. It's our financial reputation, and our credit reporting system is a broken one. And we have to legislate and act in such a way to address it and to support our medically vulnerable and disabled neighbors, many of whom are struggling with the devastating impacts of medical debt. And I only see that growing. I'm working on the issue of long COVID, and that there's a growing community of those that are living with the systems of who are COVID long haulers. And I only see this continuing to be an issue. So again, I thank you, Director Chopra, for your leadership on the issue of medical debt, the CFPB, and I thank you, Madam Chair. I yield.
Thank you. The gentleman from North Carolina, Mr. Budd, is now recognized for 5 minutes.
Thank you, Chair, and thank you, Director, for being here today. It's good to see you. Today, I want to touch on an issue related to transparency and encouraging innovation and competition. Previously, CFPB directors recognized the importance of fintech innovation for both providers and for consumers. In fact, this was the original focus of Project Catalyst, I believe, under Director Cordray. So in contrast, you've terminated the fintech sandbox program that issued no action letters. Instead, you're now asking startups and the public to file rulemaking petitions to ask for clarity. So how does your process provide consumers with more choices and create an environment for the best products to win, while at the same time allowing new firms to enter the market to give us greater competition?
Just to be clear, Senator-elect, the biggest thing we're thinking about is how to invite new players in. The old CFPB approach, I think, was about picking winners and losers. It was about choosing one company that would get the benefits and not anyone else. You mentioned filing petitions for rulemaking. They can also make requests for advisory opinions and other information. And the key, sir, is it's broadly applicable. So we want to make sure it's not just one firm that is becoming the winner, but many of them. We've also put a lot of attention on proposing Section 1033 rules. This is going to allow, and we've received a huge response from fintechs on it, about how they will be able to compete against the big guys. and be able to challenge incumbents. We have talked to investors, to analysts. What is the way in which there can be consumer-friendly innovation, and how do we invite them in? We've also identified some places where existing players may be blocking new entrants in order to resist that competition. So I think we're working on all fronts and trying not to pick winners and losers.
Thanks, Director. I want to go back to the FinTech sandbox. I want to dig a little deeper into that before we get too far afield. So in your view, can regulatory sandboxes like the ones in my state of North Carolina and others across the U.S., can it reduce barriers to innovation and help us keep pace while providing the necessary guardrails?
Yeah, so I think there's lots of ways in which the regulators can work with those who are creating new products. I think sometimes sandboxes, it needs to have a real goal. What is the obstacles we're trying to topple over? How might a product structure need some additional information about how to comply with the rules of the road? We totally embrace that, and we actually look pretty carefully about how the sandboxes are working overseas, how they're doing in the States. While we don't call ours a sandbox, we're really trying to reinvent how we're promoting innovation and more entry.
Thank you. So committee Republicans sent you a letter earlier today, which I'd like to ask for unanimous consent to submit for the record.
Without objection, such is the order.
Thank you, Chair. So the letter expresses our concern with the Bureau's recent actions over non-bank entities that both exceeds CFPB's statutory authority and harms the very consumers that the Bureau was established to protect. So what I'd like to have your commitment that you will substantively respond to the letter by its deadline of December 30th. Would you be willing to do that?
We will. You have not sent me the letter.
All we're asking you is to review it
We will
and
try our
substantively
best
respond.
to make sure we accommodate whatever you're looking for. I mean,
So we can
you
count
are-
on your response by December 30th.
I will work to make sure that we are responsive to the letter as best we can. I don't know what's in it.
We're just asking for a substantive response to the best of your ability.
I will give a substantive response.
Thank you. I yield back.
Thank you. The gentleman from Massachusetts, Mr. Lynch, who is also the chair of the Task Force on Financial Technology, is now recognized for 5 minutes.
Thank you, Madam Chair, and welcome, Director. Good to see you again. The last time you were in, we actually had a discussion about the urgent need for policy changes to protect consumer data. And as chair of the Task Force on Financial Technology, we've had a number of hearings exploring the need for a more robust consumer data rights framework. And we actually had considerable agreement from the Republican side as well. So it's one of those areas where I'm eager to work on. I was pleased to see that CFPB published an outline of proposals being considered in advance of the rulemaking that would implement Section 1033 of the Dodd-Frank Act in October. I was wondering if you might be able to expand a little bit on some of those proposals. I know that it was a general outline, but are there certain avenues that you prefer or favor?
Yes, I think that we're looking to propose a rule that would require financial firms to provide in a machine-readable, secure way people's personal ledger data, on their transaction accounts, and that the goal would be is that they could permission that to other entities that they might want products or services from. And I think the goal would be we want people to be able to switch more seamlessly. I think when consumers can switch more easily into that gives them the ability to get better pricing. It gives them the ability to say, I want better customer service, and ultimately that's how the competitive market will work best. Data protection has to be part of that. And we're really thinking through how to make sure that this rulemaking and more data sharing doesn't create an underworld or a surveillance type market. And I think that's a place where we're going to see the authorities we have. But of course, as I mentioned in my testimony, we really need to update these financial privacy laws too. I think they can be much more robust, and I think they can create issues with discrimination and other issues as well.
That was my next question. Graham Leach Bliley, I think in previous hearings, you might have indicated a need to update that. What could we be doing, apart from the rulemaking that you're proceeding with? What could we do to sort of enhance or supplement some of the things that you're doing, which I think is on the right track? If you empower, the consumer to control their own data, it gives them leverage in this whole process. And portability, obviously, because they can vote with their feet. But,
Yeah,
but
so-
GLBA, what's,
There's two main pieces of the GLBA. One is the privacy framework. One is the security framework. The privacy framework is where we have rulemaking authority. The Congress specifies that financial institutions provide a notice of what they're collecting, and then consumers can opt out, but I think consumers in this digital world in some ways are feeling like, what is the point of all these, everyone's collecting data on me.
Yeah.
How come there's not any substantive limitations on what data can be collected? Sometimes it's very sensitive data. And who is it being shared with? And do we have confidence that who it's being shared with isn't being further reshared and reshared again and bought and sold and combined with other information?
Yeah.
So I think we're seeing a number of places where state privacy laws are happening. There's work at the federal level. We think it should be all of the above, so we can protect people.
Is there a way to right-size the demand, if a consumer's making a transaction, buying a pair of socks, I think I've referred to it in the past, something simple as that. You should not have to get naked from a data privacy standpoint just because you want to buy a pair of socks. Is there a way to sort of modulate what a business can ask for a simple, obviously, if you're going for a mortgage or something like that, there's a deeper dive that they have to do to protect their own interests. But if it's just a, hand-to-hand transaction, there's no need for someone to deliver every bit of information that they have about themselves personally to make some minor purchase. And
Yeah,
that's,
including their social map, their list of contacts, and I fear that in the metaverse, this is going to happen on steroids. So the key is thinking about substantive limitations.
Yeah.
And really, how do we get there?
Well, I'd appreciate working with your staff in terms of trying to find the contours of that, where the outlines of that and the guardrails might be in that process. So thank you. Madam Chair, I yield back. Thank you for your courtesy.
Thank you. The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairwoman Waters, and also thank Ranking Member McHenry for holding this important hearing today, and thank you, Director Chopra, for being with us. The Bureau has been operating at warp speed, even in just the last quarter. It has proposed an extensive rulemaking on non-bank financial firms. It has taken numerous enforcement actions across the consumer finance landscape and seems to be operating on all cylinders. It has issued guidance on consumer reporting companies and junk fees, published bulletins and reports on cryptocurrencies, student banking products, and much more. And it doesn't look like you're slowing down at all. So we have a lot to catch up on, Director Chopra, and so I'll dive right in. It has come to my attention that the Bureau has been demanding that non-bank financial companies turn over attorney-client privileged information during the course of its supervisory examinations. You should know that the attorney-client privilege is one of the oldest and most respected privileges in our legal system. It prevents a lawyer from being compelled to testify about his or her clients, and courts are very protective of the need for it to ensure that legal advice can be useful to clients. It has been reported that some organizations have raised concerns about your practices in this area, particularly where Congress has never legislated with regard to the Bureau or its prior regulators, like with respect to non-banks. Director Chopra, what is your statutory authority to demand such information from these entities?
So I'm not actually familiar that there's a new issue related to this. My understanding is that years ago by my predecessors, there was some publication about privilege logs, for example, at a law enforcement investigation, when producing documents, they might include a log with it. I'm happy to look into that more.
Please do, if you will, check and see. It's very much a concern to me as a recovering lawyer, and would like to know what the current stance is, and if the Bureau believes that you have authority there, would like to know exactly what the basis for that is. I wanted to follow up on a statement that you made earlier to Mr. Lucas about the CFPB being subject to adequate oversight because the FSOC can overturn CFPB rulemakings. Director Chopra, how many CFPB rulemakings has the FSOC vacated?
To my understanding, none, because I don't think any of the CFPB's rules have met the standard for threatening the safety and soundness of the financial system. Part of what we are required to do under the statute is consult with the other agencies before promulgating any sort of rule to understand any sort of impacts on safety and soundness. So that is an important check, but it's one clearly where it has affected the way the CFPB has analyzed information about impacts on insured institutions.
In any event, though, doesn't it take a 2/3 vote of the FSOC to overturn a CFPB rulemaking?
Yeah, I believe that's what the statute says.
And you're a
I'm not
member of
100%
FSOC,
certain.
is that right?
That's right.
Okay. Director Chopra, would you be surprised to hear that before today, the Democratic majority has only held one hearing with government officials as witnesses in the last 146 days?
I don't track actually closely. I know since I've taken office in 14 months, I've appeared 5 times. That's all I can say.
And I wonder, do you expect that to change here in just a few short weeks when there is a new Republican majority?
Well, I don't want to predict what hearings are going to be held, but you know, we have always cooperated and worked productively with Congress.
But it'd be safe to say that you're excited to spend more time visiting with us here.
If you ever want to meet with me, I'm happy to do it, sir. And of course, we will continue to work with you.
One of our former colleagues and your predecessors, Mick Mulvaney, frequently used his testimony before this committee to highlight ways in which the Bureau could be improved, typically calling attention to the CFPB's funding mechanism and the fact that the director is not required in statute to testify before this committee, but merely required to appear before the committee. Director Chopra, could you please provide some suggestions for improving the CFPB to bring it more in line with other federal agencies?
Yes, the number one issue really, and this has been supported by my predecessor, Director Kraninger, as well, is we do not have an equivalent whistleblower protection kind of system. And in terms of rewards and protections, I think that's a place where there has been bipartisan agreement, and that would be a good improvement.
Thank you. I see my time has expired, and I yield back.
Thank you. The gentlewoman from Michigan, Ms. Tlaib, is now recognized for 5 minutes.
Thank you so much, Chairwoman Waters. I want you to know that this has been an incredible experience being on this committee as the chairwoman. I am eager actually to see your portrait in this room. I understand that's much later, but again, it's been an incredible experience to have your mentorship and your leadership as a new member on this committee, as well as choosing to do the hearing on one of my favorite agencies, which is really the People's Advocate Agency. I mean, these are folks, residents who have to take on the big banks, the mortgage companies, the credit cards, the credit reporting agencies. I mean, these are big, mega billion-dollar corporations. They can't afford a lawyer, and CFPB are their advocates. They might not be in the courtroom, but they're there to ask the right questions and demand accountability for unjust actions by a lot of these corporate entities. Director Chopra, something that you've always shared personally about why the protection of folks experiencing medical debt is so important to you. And I just want to acknowledge and appreciate so much that you've made it a priority to address the medical debt crisis in our country. Have brought it up a number of times, but what I also appreciate is that you all decided to issue, your team decided to issue a report highlighting the complicated and burdensome nature of medical billing system in our country. You know, one of the things that I think on August 2nd of this year, the Wall Street Journal had reported that Equifax provided incorrect credit scores for potentially millions of customers applying for credit, including home, credit cards, and auto loans. And then, just even hearing that complication with some of the credit reporting agencies, they decided, I think after the report, that they would, take out some of the medical debt from people. And I appreciate that. I think it impacted like 70% of folks. A huge, tremendous thing. But I also read, and you can correct me, is it 40% of Americans file bankruptcy because of medical debt?
It is one of the major contributors of bankruptcy filings is an illness and resulting financial trauma from that.
And so addressing that, we need more to be done regarding this crisis. I know so many folks have concentrated in certain other debt, but medical debt for me, again, no fault of our families and residents experiencing it. But when you hear things like Equifax doing that, 2 days later, I think there was a class action lawsuit that was filed against them, where attorneys, led by attorneys representing Nydia from Florida, and it led to Equifax landed Ms. Jenkins with substantial price her car loan and so forth. According to the lawsuit, and I know you read all these things, but Ms. Jenkins was pre-approved for a car loan in January and was denied in April, and then because her report, the Equifax made a big mistake, and I think it was off by 130 points. Because of that, she was denied and then allegedly forced to buy a car from a different dealership. And do you know she now pays about, I think, $2,000 or more per year than she would have if she qualified. So in your view, were Equifax's action in violation of the Fair Credit Reporting Act?
I got to be careful on this
I
one because they're
know.
subject to our entity. But let me
I
just
think
be
the American
clear on
public
it,
needs
though.
to know this is huge.
The Equifax data breach was really an egregious violation of law. We are concentrating on actors that cause widespread harm. We're not focused on little players. And the extent to which that the market mechanism doesn't work. Again, consumers don't choose Equifax, Experian, TransUnion.
I know.
It's chosen for them, and I think that really is a core part of the issue.
Do you at least, could you say, do you think Equifax had the appropriate procedures and controls in place to ensure accuracy? They are controlling whether or not somebody becomes a homeowner, to get a car to go to work. So much more. Even families that tell me they have to get loans out to send their kids to college, all of it's impacted, and if they're not accurate, these are three, it's a monopoly, right? These are three major agencies that control whether or not my residents not only survive, but thrive.
There are a handful of data firms, and I would say it's not just the three credit reporting companies, but also increasingly other tech data firms have enormous power over all of us, and that's why we need laws to be enforced to make sure that consumer rights are protected.
I think in the next session, I do want to work in some sort of way to figure out, especially with the credit reporting agencies, and I, of course, will continue to work with our chairwoman on this, but, it's being used for so much things, auto insurance rates. Has nothing, whether or not somebody has a high credit score, whether or not they're a safe driver, but it actually is now, disparate impact, is impacting majority of Black drivers across our nation. With that, I yield. Thank you, Chairwoman.
Thank you. The gentleman from South Carolina, Mr. Timmons, is now recognized for 5 minutes.
Thank you, Madam Chair. Director Chopra, welcome. Thank you for being here. So in April, I asked you a number of questions about the CFPB Fellows Program. I still have a lot of concerns about the appropriateness of it. The chairwoman was very concerned with the last administration having 10 political appointees. While you only have 8, you have 21 fellows, most of them making over 214, many of them, well, all of them making more than you. So I do want to say thank you, though, because we asked questions. We sent a letter. 2 weeks later, you responded May 27th that you were working on it, and then on October 14th, you sent really a large amount of information regarding all of the ethics requirements that the fellows were subjected to. So I really do appreciate it. I have some follow-up questions, but before I get there, y'all took the website down. Do you know why you took the website down for the fellows program?
The CFPB website? Oh,
Yeah.
The section on the fellows program?
Yes, sir. It's gone.
I think it was a job posting.
Okay.
And maybe that's why, but if there was a different section, I'll take a look.
Okay, that's very interesting.
But just to be clear, I think it was a job posting that is on USA
it
Jobs.
It described everything. So, anyways, we can follow up with that, too. So, the House of Representatives and the Senate have financial disclosure requirements for members of Congress and their spouses. Any staffer making over $135,000 also has those financial disclosure requirements. The reason that we have those, theoretically, is that we have inside information that could impact publicly traded companies' values, and we could theoretically profit off of that. People allege that that happens with certain individuals. I don't own any publicly traded companies, so I don't have this concern for myself, but there's talk of banning members from even owning publicly traded companies at all. And that would not only apply to members, but their spouses, and staff making more than 135s, their spouses. And I've been here for 4 years. I don't have any inside information that I could have traded on if I wanted to. So that's not really true for your 21 fellows. Y'all issue guidance. They have advance notice of that guidance. That guidance generally impacts publicly traded companies' values. Is that fair?
No, I think they must adhere to the same exact requirements, for example, on our prohibited holdings list. They're not allowed to hold any of those.
That does not apply to their spouses. It doesn't. I mean, what you sent me says it does not. So,
okay, I'll look into that, but I don't see it. There's no, as I understand, there's no difference between those who are hired. There's no differences in employee types that are not subject to the same.
The information that you sent us says that your 21 fellows, their spouses have no financial disclosure requirements. So we have no idea whether they're using inside knowledge of guidance you're about to issue that's going to impact publicly traded companies to trade on and to make a whole bunch of money. We have no idea. There's no way of knowing. So, I mean, I think that we probably should fix that. I mean, there's a lot of talk of people benefiting off of information. I'm not saying anybody is. I'm very optimistic they're not. But generally speaking, we want to give the public maximum confidence, especially when there's a lot of detractors from the organization. That happens. But it's fair to say that we should have a high degree of confidence that your fellows are not, their spouses are not trading on advance notice of guidance to make a whole bunch of money. That's fair. You agree with that?
I do agree, and in fact, the Federal Reserve System has had a number of major issues related to trading of securities. The Fed's IG, which is also our IG, has provided us, and we have gone above and beyond to make sure that our folks are not engaged in any similar activity. I want to look into this issue about spousal coverage. My understanding is that all employees really are under the same rubric. There are some higher standards for those who make over a certain amount, but I don't think there's any differences among that. And I would, by the way, support,
We'll get some legislation written to make sure that anybody that has access to information that they could benefit from has financial disclosures. I think.
And by the way, I would tell you, we would absolutely, if we would report any of our employees to appropriate civil and criminal authorities.
But you would never
use
know.
non-public information.
You would never know because you don't have to. Their spouses don't have to tell you their financial decisions. They don't have to tell you their trades. They don't have to tell you anything because that's not the law. The law, and again, Congress, if you make over 135 as a staff or members or spouses, you have to disclose everything. And
Well, my understanding is that it applies to all of our employees. There's no
it
difference.
does not apply to your fellow spouses.
Does it
that's what
apply?
you said.
Does it apply to the career employees' spouses?
I
think
I'm
that's
just looking
what
at the
we'll work
fellows.
on.
We'll work on it. I really appreciate it. Thank you, sir.
Thank you, sir.
Thank you. The gentlewoman from Pennsylvania, Ms. Dean, is now recognized for 5 minutes.
I thank you, Madam Chair, and I associate myself with the words of our colleague, Ms. Tlaib. It has been a privilege for me to serve on this committee with you, with your leadership, not just this Congress, but the 116th as well. So thank you for all your leadership. Thank you, Director Chopra, for testifying today, and thank you for the work of the CFPB. I thought I'd start with the state of household finances. We know that high deposit amounts due to pandemic relief programs have begun to decrease, especially for lower income Americans. The New York Fed reported that the 15% year-over-year increase in credit card balances for the third quarter of this year was the largest in 20 years. They also noticed an increased delinquency rate across all debt types. Director Chopra, how concerned are you about the state of finances for average Americans given current economic conditions?
I appreciate the question. One of the things that's so key here is we started seeing a return to normalcy for most American households. They were spending again, they were borrowing again. There's certain places where they faced increased costs because of inflation or, say, vehicle prices. So auto loans, credit cards have gone up. Delinquencies have returned, and in some specific segments, we see that delinquencies are actually above the pre-pandemic levels. So it's a place that we are really looking at the data, working with the Fed and the Treasury to understand what's happening. You're right, at the lowest income levels, we are starting to see a bit more pressure on those households. Overall, though, I think the volume of deposits in the system has not gone down as much as we would have anticipated for those households because of the strong labor market. So I really feel it's not the CFPB's job to make any projections. My job as director is to be paranoid and ready so that we can be decisive if things quickly deteriorate. And there's a lot of uncertainties in the global economy, and we spend a lot of energy being prepared for that.
And where are you seeing, what segments are you seeing increased delinquencies?
So there's a place where we've seen at the lowest credit tier in auto, we see that as elevated relative to pre-pandemic. Obviously, the pandemic had very different type of contours. We've also started to look at where student loan borrowers who are not currently in repayment, how are they currently faring on their credit cards and auto? So we do see that those with student loan debt are actually having some issues. Obviously, we got to look at all of these pieces together to see how household finance is changing. And of course, we want to make sure that when it comes to housing and mortgages, that's the place with the most exposure to the economy. And so we see that refinancing mortgage origination has gone down quite a bit, and that's having lots of effects on homeowners. Increased interest rates are leading to billions of dollars in more costs for those borrowing on credit cards and other debts. So we're seeing some major changes and tracking it closely.
Well, that connects to my next thought or my next concern, and maybe my own paranoia. In hearings in this committee earlier this year, one issue that came up is homebuyers' renewed interest in ARMs, adjustable rate mortgages, given the rising interest rates. Something that I think gives all of us some pause, the role, when you consider the role that ARMS played in the 2008 global financial crisis. While the ARM share was only about 3% in January, it increased to 10% in the spring as the Feds started raising rates. You noted this trend in your testimony. Director Chopra, how concerned do we need to be about the resurgence of ARMS? Is there more we need to do to ensure borrowers are protected?
So as of right now, I would not be too concerned. The reason why is that we have taken a look at this. Most adjustable rate mortgages being originated are still following the ability to pay standard and the qualified mortgage rule. So I do think there's risks there, but I don't think we should equate it to what we saw in the lead up to the financial crisis. That being said, I really worry that people, are not shocked by the payments that they have to make. Fortunately, the reforms that Congress made to the mortgage market have made things safer. Rate mortgages, we have published information for consumers so that they know what they're getting into with an ARM. We've also been collecting comment on how to make sure people can refinance in the future. So
I see my time has expired. Thank you very much, Director. Thank you. I yield back, Madam Chair.
Thank you very much. The gentleman from Wisconsin's Mr. Stile is now recognized for 5 minutes.
Thank you very much, Madam Chairwoman. Thank you for being here, Director Chopra. Appreciate it. As I listen to you, you're a man that chooses your words carefully. You think through what you're saying. As we know in the markets, words have a big impact. And in particular, CFPB, where often we're enforcing by rules against wrongdoing within your jurisdiction. I think it's really important to keep in mind how impactful the words are that we use in this space. And I'm sometimes concerned about ascribing motives and using inflammatory phrases that aren't standard terms of art that can have big impact on firms, on people, their workers or customers. And so I look back at the CFPB Ombudsman conducting an independent review of Bureau press releases, and they found that some may include misleading language. Can you describe your policies and practices that you put in place since the Ombudsman review to ensure your press releases are accurate? And then can you confirm if you're following those policies?
So the Ombudsman's review, I think that was several years ago, if I'm not mistaken. We take a lot of efforts to make sure that we publish the complaint and any other information in an enforcement action. But absolutely, we will use plain language to explain what has happened. And in many cases, the conduct is egregious. And we need to sometimes say that so that people understand what exactly happened. You know, it's not.
But is it important to use terms of art in the industry, or are you using, when you're saying to say that, are you trying to use flowery and descriptive language?
Well, I like to speak in plain language.
Okay, so that's good. So you like to speak in plain language.
Well,
in particular,
in legal documents, we try and be very
precise. So let's jump off the documents. Let's go to maybe some of your speeches. And some of your speeches, are those reviewed by attorneys before you make them?
In some cases.
In some cases, but in some cases, no.
I don't know. I can't speak.
You don't know if your speeches are reviewed by legal counsel?
I don't know if every single set of remarks I've done has been reviewed by an attorney. I just don't. I assume.
So that would likely mean then that there's not a policy that you have where you prepare remarks.
Where we're talking about the law, if I'm just giving some sort of welcome or inviting people in that doesn't involve really policy, that may not be one that we review by lawyers.
That's fair. Okay. I'll on board. In a previous speech, you referred to medical debt as a doom loop. Is that a helpful term? Could you have been more descriptive?
Yes.
Or do you think doom loop is the appropriate term?
Well, I think actually medical professionals use that term.
Okay, so
where patients feel like they're in an endless, infinite loop with the insurance company and others, and that is how it feels.
Okay, you referred to the credit bureaus as a cartel. Is
no,
that?
I did not. What I said there was that the way in which they made a decision was not what you would see in other sectors. They came together and made a uniform business decision. That actually concerned a number of people because it's not the sign of a competitive market. It was not done in a way if banks got together and do that, that would raise some serious questions. So I do worry that those three players.
So you think it was an accurate description to call those three players a
I didn't
cartel?
call them that. I said they were acting in that manner.
They were acting like a cartel, but not a cartel?
Well, I will
maybe
read the
maybe we're
statement
splicing
again.
words. Maybe
But let me just say
attorney's
this.
advice might have been helpful here.
I take your feedback about thinking about language, and I guess I would say that it is important to balance both precision and understandability. People need to understand what their government is doing. When we just speak in jargon and just speak in citations of code, they don't understand. And in fact, it's businesses that also want it. It's consumers that want it. So it's our job to be able to convey what we are doing, and in some cases, to be able to say when conduct is unlawful and egregious, and that's what we do sometimes.
Yeah, I think as we look back at that previous ombudsman review, I think it might be good practice that people review some of the comments, because flippant remarks or descriptive language that is not actually held in statute, the reason people speak in jargon is in particular in the financial space. I think it's important for people to understand where you're coming down on any rule regulation, because the power invested in you by previous Congresses, not this Congress, is incredibly significant. This Congress doesn't hold authority over the appropriations process, which I think it should. Doesn't matter whether or not you think it should, because you don't need to respond to the appropriations process. You don't even need to comment on it. So previous Congresses have bound this Congress in the operations of the CFPB, and so I would flag to you that the word choice you're using with the power that you have is quite significant, not only in the markets, but to consumers, to individuals that are dependent upon you doing your job well. I thank you for being here. Madam Chairwoman, I yield back.
And I take the feedback seriously.
Thank you so very much. The committee will recess to allow members to vote on the floor. We will resume immediately following this vote series. The committee stands in recess. Thank you very much. The committee will come to order. The gentlewoman from Texas, Ms. Garcia, who is also the Vice Chair of the Subcommittee on Diversity and Inclusion, is now recognized for 5 minutes.
Thank you, Madam Chair, and I want to thank you for your steadfast leadership of this committee as we come to the closing days of the 117th Congress. Director Chopra, thank you again for being here today, and thank you for leading the Bureau with such drive, enthusiasm, conviction, and most importantly, openness. You have been a breath of fresh air knowing that you're always open to listening to us, taking our questions, and being as transparent as you can as all your answers. So thank you for that. Last time we spoke, I asked you about the Bureau's authority on the issues regarding language access, which is an issue that, as you know, I've been following in Congress, and you and I have talked about it before. You agreed that language access for consumers is important, and that in particular for people in the district that I represent, which is 77% Latino, you assured me that you would consider the authority of the Bureau and what it was that you could do. So I wondered if you could give me an update. I noted on page 58 of your semi-annual report that you talk about fair lending, outreach, and education, but nothing specifically about language access. And you mentioned that you have, through your publications that you issue, whether they're policy statements, requests for information, press releases, blog posts, podcasts, videos, brochures, website updates, on and on, that you're doing a lot more in terms of making sure that different stakeholders get this. Can you tell me how you've been able to implement any language access in any of these outreach materials that you're doing and in other areas?
There's a few things I'd say. One is, what is the key way in which people are communicating with consumers from financial providers, whether it's remittances or mortgages? There's all sorts of work to translate disclosures and other key information. We have started the process of publishing officially translated disclosures that providers can use. And sometimes they're marketing in a language other than English. It only makes sense that they can also provide the right information in that language as well. With respect to our own materials and our own website, we've started a process of usability testing with Korean speakers, Tagalog speakers, and many others, so that we can provide all the digital tools as well in languages other than English. As you know, there are so many ways in which people feel intimidated or scared when it comes to financial challenges, and often language barriers amplify those anxieties. So we really see this as a long process with a long way to go. A big development was the change to the Uniform Residential Loan Application, which now is going to collect language preference and also include other information to help those who are not primarily speaking English navigate the mortgage process, including their mortgage servicer as well.
Well, you anticipated my next question, because one important step towards building wealth is home ownership. So I'd like to ask you about the Bureau's recent actions to hold 2 mortgage lenders accountable for redlining and housing discrimination. Latinos are on track to be the largest group of home buyers in the nation, but they, along with other minority groups, face redlining and other systematic barriers to home ownership. I was especially pleased that the Bureau is standing up for consumers. I think you have filed issued some civil penalties to some of these folks, directing millions of dollars to supporting home ownership in the communities and neighborhoods where those lenders deliberately discriminate against Black and Latino families. My question is, how will you make sure that those millions that you settled on through the civil penalties will get to people? How will you make sure that it's distributed and that people that you intended will actually get benefit of that settlement?
So obviously our orders are not suggestions, and we did a few recent orders with the Justice Department, which outline how, whether it's restitution, loan subsidies, and others, need to be administered. They often submit a compliance plan, and we look at that carefully. I do want to acknowledge, though, that I think the orders in redlining in some ways need to be a little bit rethought. And we're going through a process to make sure that the victims of the redlining are actually getting benefits. I worry that some of the ways in which the Justice Department and the CFPB and others have remedied these in the past may not be reaching those who are truly the victims of redlining. And so that's part of what we're talking and thinking through with lots of different stakeholders about.
Well, thank you, because that is my concern, that the people that were harmed get the benefit of the penalties. Thank you.
Thank you very much. The gentleman from Illinois, Mr. Garcia, is now recognized for 5 minutes.
Thank you, Madam Chair and Ranking Member, for holding this important hearing. And of course, I want to thank Director Chopra for testifying in front of this committee again and for your strong leadership at the CFPB. Last week, Member-elect Maxwell Frost tweeted that he had been denied an apartment because of bad credit, and his application fee was not refunded. Member-elect Frost said, and I quote, "This ain't meant for people who don't already have money," end of quote. His experience is not unique. Tenant background checks make it harder for thousands of families to find housing. Finding housing is especially tough for people who have been evicted in the past and for people who have had criminal convictions. Just last month, the CFPB put out 2 reports about tenant background checks. The reports found that in addition to contributing to higher costs and barriers to quality housing, tenant background checks are riddled with errors as well. Director Chopra, can you expand on some of your main findings from these 2 reports?
Thank you so much. Tenant screening reports are covered by the Fair Credit Reporting Act, and they must have reasonable procedures to assure maximum possible accuracy. And one of the problems we're seeing is that people are being falsely matched with someone who is not them, and it is disqualifying them from obtaining rental housing in the location or neighborhood of their choice. I think we have to be really careful when it comes to tenant screening and employment screening. If they're not accurate, we'll be in a system where some people are systematically unable to get a job or an apartment. That has huge impacts on their life. And so as the Congress is working on data privacy, credit reporting, I hope we can think about tenant screening and employment background screening to ensure that they are fair and accurate.
Absolutely. And is the CFPB working on any rulemaking to address the harm caused by these background checks?
So both the CFPB and the FTC have been undertaking a number of pieces of work. Over the last several years, there's been 2 significant enforcement actions, one against Appfolio, one against RealPage. I expect there will be more of this going forward where there is law breaking. But also, we are considering whether to launch additional rulemaking on the Fair Credit Reporting Act. I think a lot of focus is on the 3 credit reporting conglomerates, and that's true, they impact everyone. But as more data brokers and background screeners and big tech companies are forming these dossiers about us, we need to make sure that people's rights under the law are being respected.
And briefly, is there anything Congress can do to help?
Well, I think, as I outlined in my testimony, I think there's a lot of important issues related to data protection and privacy. Obviously, the Equifax data breach had a huge impact on people's confidence in certain circumstances to say, where is my data even being held? How is it being secured? I think we need to work on whether there's ways to meaningfully limit the types of information that financial firms are collecting about our most sensitive information and make sure that there's not an underworld of our financial data where essentially our sensitive information is bought and sold. I think we have to be more careful, and I think on both sides of the aisle, there's a real interest in this.
Thank you. Redlining and other discriminatory lending practices contributed to making Chicago, my hometown, one of the most segregated cities in the country. The Community Reinvestment Act was enacted more than 40 years ago to fight redlining. Despite the progress we've made because of the CRA, discriminatory practices still continue, and we've got to keep fighting to get that legacy of segregation and discrimination out of lending practices. That's why I was happy to see the CFPB's recent actions to hold 2 mortgage lenders accountable for redlining and housing discrimination. Both the Trident Mortgage Company and Trustmark National Bank are required to pay millions in civil penalties. Hopefully, this will be a lesson to others who want to engage in these practices. Thank you, Director Chopra. My time is just about out. Look forward to continuing to work with you to protect consumers.
And thank you. And I know the Attorney General's redlining initiative, we are actively participating, and we're continuing to make progress not only in traditional redlining, but also the digital redlining of the future.
Thank you, sir. Madam Chair, I yield back.
Thank you very much. At this time, I'd like to thank our distinguished witness for his testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for his response. I ask our witness to please respond as promptly as you are able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. This hearing is adjourned. Thank you so very much.
One